as well, and we will be giving you all the next 3 years numbers as per what the Bloomberg is estimating. Now, of course, there's the benefits of rate cuts translating into earnings stream, and that itself could actually bump up the earnings as well as even consumption picks up, and also it's a moving indicator for the pickup in the private capex as well. FI short covering rally is expected to come. Yesterday, the FI shorts in the system were just 86%, and earlier, if you look at it, that number was 92%. A significant jump came in yesterday's rally, and now we're seeing that overall the momentum in the market still remains very positive. Also, private banking stocks, they have also contributed a lot to the gains, and Nifty Bank itself today in a lifetime high levels, and in some time, Vansh will be also giving us the reasons why Nifty Bank has jumped up. Now, ahead of the important earnings, Reliance today post-market hours, large banking stocks, HDFC, ICICI Bank in the weekend. So overall, the Nifty seems bullish ahead of these major contributors in the Nifty index, and the numbers would be coming over the next 48 hours. Also, the flows to the emerging markets, that may see more churn also. Already Taiwan and China have seen high flows coming in, and India on the other side has seen negative flows coming in from the FIs, so that might reverse as well. But now let's look at the numbers, how actually the things pan out. Top Nifty gainers this year itself. Over here we have Bajaj Finance and Maruti Suzuki giving returns of more than 50% to the investors, followed by Eicher Motors, Bharat Electronics, and lastly Bajaj Finserv. So both Bajaj twins making it to the list. Also, let's look at the key numbers for the Nifty EPS, what the overall projections look like. The EPS itself, FY27 is expected at 1166, and for FY29, roughly 1449 would be there. There will be a slight dip is expected for FY28. But now let's look at what the valuations are there for Nifty, and that's very important when it comes to the flows as well. FY27, it's coming in at 22 times, so it's roughly, you could say, near its long-term averages. But on the lower side, we are expecting 19 to 18 times of Nifty P in the coming 3 years as well. But today, the party still belongs to Nifty Bank, but nevertheless, Nifty itself is at its one-year high levels.
Thank you for that, Sharad. Nifty at one-year high levels, but that little bit of cooling off that is happening already. And as Sharad was mentioning, the party is with Nifty Banks. Let's just pull up the Nifty Bank Index and the Nifty PSU Index as well, because that will tell us what's happening there. Nifty Bank, you know, I mean, see, it's actually tried going down. It's again seeing some bit of a recovery that's coming in. Let's pull up the PSU Bank Index as well and see what's happening on that front. You have, I mean, completely in the red. So those divergent trends do continue between the private and the PSU banking space. In fact, I'm going to get in my colleague Vansh as well now to tell us more in terms of what is, one, leading to this kind of rally in terms of bank majors right now, the kind of dichotomy that exists between Bank Nifty as well as, the private banking space as well as the PSU banking space. But before that, let me come to you, Ruchit. Ruchit, I mean, you know, the kind of recovery also that we are seeing from the day's lowest levels once again, you know, specifically with regards to where banking majors are concerned, anything that comes to your radar that could be a good investment opportunity ahead of the earnings tomorrow for a play on Monday?
So I think, yes, overall trend for Bank Nifty no doubt remains positive, and we spoke earlier as well that this is one of the sector which had shown signs of leadership in the recent move and has been outperforming. So I think within the private sector banks, on charts, HDFC Bank looks much positive, where a good support base has been formed. The stock has also consolidated in a range since last 4 to 5 months. So the risk reward ratio has now become favorable in SBI, in HDFC Bank over there. So one can choose HDFC Bank from a private sector banks, and similarly within the PSU space, State Bank has shown a good breakout recently only. So that outperformance of the leadership is getting continued with State Bank within the PSU space. So both the heavyweights are leading the benchmark index higher. So HDFC as well as SBI, both one can look to take exposure at current levels also.
Banks, let's quickly pull up Hinzing. The numbers have just come in. The profit number, if you see, is slightly ahead of what the street was estimating. Similar is the trend with regards to where the top line goes as well. Margins have improved. The number has come in at 52%. In fact, I'm going to see if I will be able to head across to Vansh to tell us what's what the number trend is looking like in terms of Hinzing. 10% growth in terms of revenues, 8,549 odd crores is what you're seeing. And if you see from a margin perspective as well, let's see what that number is looking like, and the EBITDA. Overall, can I just get the EBITDA number as well on the graphics, because Profits up around 18 to 19%. 2,649 odd crores is the number you're tracking. Let's pull up the intraday chart of Hinzing and see what that stock is doing in trade. A mild recovery that's come in from the day's lowest levels on a Hinzing. Ruchit, a quick view in terms of Hinzing, a recovery in terms of the stock. It has rallied quite a bit in the last couple of trading sessions on the back of the way metal sector was moving. Are you picking up anything?
Not at current levels, because as you said, the prices have already rallied over last few weeks. So we would wait for some sort of decline or any kind of pullback move if it comes in stocks within the metal space. I think Hind Copper is one stock which positionally looks positive. Hinzing also, it's not the charts are not negative, but the momentum readings are a bit in overbought. So not recommending at current levels, but in case if we get any dip towards 480 kind of range in the near future, then one can review over there.
So 480 should be an entry level in terms of where Hinzing goes. Ruchit, stay with us. We'll quickly slip into a short break. Stay tuned. Lots on the other side.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
She is a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science.
Welcome back to India Market Close at NDTV Profit, and right now let's move on to see why Nifty Bank has been rallying and it has hit its record high levels. Now decoding the reasons for the rally and the up move in the stocks is Vansh here. Good afternoon, Vansh. What are you gathering here?
Well, thank you for that, Sharad. So yes, we have seen a spectacular rally from the Bank Nifty that has come in. In fact, if you look at the performance of Bank Nifty in comparison to the benchmark Nifty, what we have seen is the outperformance across the 10 years. We have seen Bank Nifty outperforming the Nifty. Also, if you look at a 1 year basis, we have seen run up of about 12% on Bank Nifty versus a mild 4% run up on Nifty as well. Now let's also look at the top 10. Let's also look at the top 10 performance, top 10 performers of the Bank Nifty from the lows of March 2025. We have AU Small Finance Bank and Canara Bank that has witnessed gains of about 52% in terms of the run up, and we have analyst consensus stands with large caps like Axis and HDFC with a return potential of about 13 and 9%, with 42 and 46 buy calls from the analysts as well. Now let's also understand the reasons which are driving this rally. Firstly is the FI interest that is increasing for the private players. Of course, we are also awaited for the announcement of the Emirates National Bank buying the stake in RBL Bank, and the results for the same are expected tomorrow as well. Also, we have seen that the rallies ahead of the earnings that are expected for HDFC, ICICI, IndusInd, RBL Bank, and many other banks tomorrow. Also, we have seen the brokerages that have turned bullish for Kotak Bank. They are in fact expecting the Kotak Bank to be a re-rating candidate as well. Lastly, if you look at the medium-term technical setup, it also remains bullish for SBI and PSU banks as well. And lastly, if we look at the institutional interest, it's also on the verge of rising for all of the banks as well. This is what the overall picture is looking like for the entire Bank Nifty as well.
Okay, so that's with regards to Bank Nifty, and I think Vansh is going to have a super Saturday tomorrow, reporting all the banking numbers with Vishwanath Nair as well. But let's also now getting Kunal Shah, Senior Technical and Derivative Analyst at Mirae Asset Sharekhan. Kunal, welcome to NDTV Profit and wishing you a happy Diwali in advance. How are you looking at this entire setup when it comes to the rally we are seeing in banking majors today? And clearly, it's the private banking space which is leading the up move. The pressure does continue on the PSU space, where you are seeing profit booking that's coming in after that rally that has already happened. What should the strategy be, and any topics on Bank Nifty?
Good afternoon. Good afternoon to everyone. Firstly, happy Diwali and happy Dhanteras to everyone. So again, what we have seen in the markets here, the rally, what we saw from 24,600 towards this mark of 25,700, 800, this has been purely led by the large caps. And you will see the index continuously making a new high on the upside. And we are positionally bullish on the index, where we expect the short-term target of 26,200 to be achieved on the upside. Even for Bank Nifty, there is still upside left. We are expecting a positional target of 58,500 on the upside as well. So I think these are still there is upside left for the markets on a short-term perspective. Bank Nifty is one which was underperforming earlier, and now it has been outperforming. So earlier it was only the PSU banks who were participating. Post the RBI policy, you got the participation from the private banks as well. And that is where the double booster came in for Bank Nifty, and you are seeing the outperformance continuing. So we expect both PSUs and private to continue on the upside. We expect 58,500 to be touched in the next week for Bank Nifty. And for Nifty, we are headed toward 26,000 on the upside.
Well, yes, we are heading towards the 26,000 levels for Nifty as per Kunal. Kunal, what would be your technical picks here?
The first will be from the pharma space. So we have now seen pharma coming back in flavor, and I think in the next week, pharma could be one sector which could continue to outperform. So here my buy call is on Cipla. So Cipla has been forming a rounding base formation. There has been a flag and pole pattern, and we have broken out on the upside. So here again, a fresh momentum is likely to build up. So Cipla is a buy for me with a stop loss of 1540, looking for targets of 1620 to 1660 on the upside. So that is from the pharma space, which is the first call which is there on the buy side. On the second call, from me, it is the consumption space. I think Nifty consumption looks extremely strong on the charts. Already a fresh breakout has come in. And from there, my pick will be Tata Consumer. So Tata Consumer on the weekly charts have given us a breakout from a symmetrical triangle pattern on the technical parameter. And now it is ready for the next leg of up move. So this is, you can say, a positional call. Probably you can say for the next 1 to 2 weeks, where Tata Consumer could continue its outperformance. So one can buy at these levels or any dips towards the support zone of 1150. So 1167 is where it is currently trading. So 1167 to 1150, consider this as a broad range, keeping a stop loss on the downside of 1110. And one can expect targets of 1300 in the coming 1 to 2 weeks. So I think a good potential upside of nearly close to 10% what you can expect the stock in the next couple of weeks.
Yes, if you look at the consumption space, we spoke about it. It's the top sectoral gainer as well. But Kunal, to get into this consumption space, there is a proxy, of course, the liquor space. Over here, Radico Khaitan, the stock is at its all-time high levels, and the chart setup looks strong. Will you recommend taking a little bit of profits off the table for the investors?
No, I think continue holding the stock because this has been a fresh breakout from a small symmetrical triangle pattern which has come in today's trading session. It has broken out the all-time high, that is the swing high. So there is still more upside left into the stock. The stock can go towards the upper end of 3,200. So I would continue to holding the stock for the potential targets of 3,200 to 220 on the upside.
So continue holding if you are an investor for Radico Khaitan. The target price, or you could say 3,200 plus levels, is something to watch out for. This is coming from Kunal. But let's put on the spotlight to the top 3 newsmakers of the day. Varsha is here joining in with the list. Good afternoon, Varsha.
Good afternoon. Well, actually, I have 5 stocks which are buzzing on the back of news. Let me start with Kalpataru, wherein we have Q2 business update, wherein if you see the pre-sales is up 19% while collections for the company grew 37% year on year. Then you have Dalmia Bharat, wherein company came out with its Q2 FY26 earnings. The EBITDA, if you see, rose almost 60%, which was above estimates. Sales volume was up 3%, realization was up 7% year on year, which was below estimates. While next on the list is Adani Power. If you see, company is going to form a JV with Drug Green Power, which is from Bhutan, for 570 megawatt hydroelectric project. The share Adani Power will have a share of around 49%, and the rest will be with Drug Green Power. Next on the list is Max Healthcare. Well, this is buzzing on the UBS note, wherein they've hiked their target price. UBS says that Max is best positioned for hospital asset creation among peers, and the government price hike for schemes will actually benefit Max, considering a major revenue coming from a government segment. While Max Smart and Nanavati to start this quarter will see full impact by FY27. Lastly, you have Anupam Rasayan, which was under pressure on the back of Q2 FY26 number. There you go, the stock is down almost 6%, though you're seeing good uptick when it comes to revenue and EBITDA, but margins are something which is under pressure, because if you see, margins are at 18% versus 27%. So this might be one of the reasons why the stock is under pressure.
Well, thanks a lot, Varsha, for bringing out these stocks. But a significant downtick coming in for Anupam Rasayan. Of course, the numbers impact is there. If you could just pull up the intraday chart, important fall coming in. The stock is down, and the day's low levels down almost 6%. Kunal, any chart check on Anupam Rasayan? Will there be more pressure, selling pressure coming in?
I think overall the stock was seeing distribution at the higher levels, and the resistance of 1180 now continues to be a strong resistance. Any pullback, even if you get into the stock on an intraday perspective or for the next 1 to 2 days, that would be a good point to exit the stock. Overall, we are seeing the end of the leg, and the entire rally which had played out from the levels of 600 to the mark of 1200, the stock had almost doubled. We will see some correction coming down towards the zone of at least 950, 970, and probably from those level one can again see the stock on the long side.
Okay, so that's a technical view coming in on a few of these names, but let's also get in Avinash Garakshakar from Profit Master Securities. Avinash, good afternoon, welcome to the show, and wishing you a happy Diwali from NDTV Profit. My question coming to you is, we've been talking about markets quite a bit right now. Overall, individual names which are in focus, Dalmia Bharat on the back of earnings, Kalpataru, Adani Power is buzzing in trade as well on the back of the 570 megawatt hydroelectric project in Bhutan. And you're talking about a Max Healthcare where UBS has gone ahead and hiked the target price. Anything that you like from this space, from the newsmakers that Varsha took us through?
No, I think, Hiral, first of all, happy Diwali to you and the entire NDTV Profit team. My sense is, cement companies are definitely looking interesting. And in this case, Dalmia Bharat, which is a large cement play, I think definitely has given a decent kind of number. I think, if you look at the overall structure and the kind of positioning they have made, my sense is that, I think cement sector, according to me, the second half is going to be much better. Typically, the season starts from October onwards, and we could see a higher volume pickup, a better profitability kind of trajectory in the second half. So here, I think if the stock corrects a little, I think it would provide a good entry point for investors who want to take a next 12 to 15 month call. We are structurally positive on cement. We also like amongst the large names, Ambuja Cements, Ultratech, as well as Ramco Cements. We believe that cement prices are bound to increase, and that is definitely going to add a strong profitability kind of trajectory to the largest cement players. So net, I think cement could be a kind of a sector to watch out.
Okay, so cement is going to be a sector one should be watching out for. That's a view coming in from Avinash. Apart from that, now let's look at few of the other names which are buzzing in trade. Avinash, bank Nifty and banks is what we've been talking about since quite some time. How are you looking at this entire setup ahead of the numbers that will be reported tomorrow? We've been reiterating this because the private banking space is on a tear. PSU banking space is seeing profit booking in today's session.
No, I think my sense is the private sector banks like HDFC Bank, ICICI Bank, even Federal Bank, these are companies within the private bank space where we believe the numbers could be much better than what the street expected. I think, of course, Axis Bank, there was a minor disappointment because of the provisioning number, but ICICI Bank looks very attractive. I think all the divisions, specifically the core banking, the insurance, the asset management business, the broking business, everything looks well positioned, and I think asset quality seems to be under check. So I think ICICI Bank could bring a surprise in terms of the overall profit number. We are structurally positive and feel that ICICI Bank looks better than all the other private sector banks. HDFC Bank, I think we need to be a little cautious because HDFC financial numbers were not very encouraging. I think although in the operating profit side they did a good performance, but on the net side, numbers were not all that great. So I think we'll have to see what kind of commentary comes from HDFC Bank. But net, I think the second quarter is going to be significantly better than the quarter one. And I think the second half, we'll see a good amount of credit push considering the kind of GST cuts which have been announced, because the major GST consumption kind of pattern is likely to start from the month of October. So net, I think, ICICI Bank looks pretty attractive. We have been very positive on this stock, and I think expect a good performance from both ICICI Bank and HDFC Bank.
Okay, so that's with regards to banking majors, but let's understand the bull versus bear segment today, because we're not really talking about a particular stock today, we're talking about a sector which is IT. The profit booking that has creeped in today's session, because you have all your large cap IT companies which have already reported numbers. Let's head across to Jasmeet to understand, basis the commentary, basis the performance, what is the bull and the bear case for IT? Jasmeet, over to you.
Well, right, thank you for that. Now, if you look at the first bull case, we see the top 5 IT tier 1 companies have beat the street estimates. Now, in terms of the bear case, we see that, but the growth is subdued in 3 to 5%, though there's a beat, but there's still a muted kind of growth. Now, if you look at the next bull case, you see that the margins have surprised the street positively, given the expectations to have a muted kind of margin. But on the other hand, the margins have come on the back of cost cut rather than volume growth driven. If we look at the next bull case, companies has been heavily investing in the AI adoption, which is turning the structural move for the company, which is a positive thing. On the other hand, we haven't actually noticed any revenue clocking with this AI initiative. Apart from HCL Tech, we see they have come up and reported their revenue of $100 million for this particular quarter. Now, next bull case, we see firms like Infosys, Wipro, Tech, and HCL Tech raising their overall guidance, which is the again positive bull case. But on the other hand, the bear case, the guidance hike still remains modest to low cautious. Anywhere between -0.5 to 3 remains muted for the sector. The next bull case would be rising deal wins, clocking in more shows the momentum of the company, and companies also hiring many more people, showing that a great visibility in the future. But on the other hand, we have noticed that the deal ramp up and the additional cost is causing pain in the company. We don't see the deal turning up into the revenue. So it is overall bull and bear case of the IT sector.
Well, very interesting research coming in, Jasmeet. Thank you very much. But of course, looking at the IT pack, the Nifty IT index, that's down almost 1.6%. The cut is actually falling more. It's at the day's low levels as well. Kunal, I have a question for Wipro. The stock has actually taken a beating. Would you recommend any bottom fishing, any kind of a buy right now, or would we wait and consolidate the entire sector?
I think firstly, I'll talk about the Nifty IT index. So Nifty IT index has already been a strong downtrend since the last 1 to 2 years. And we have seen a lot of low bottom formations here. So for the IT index, which is currently trading at 35,000, the index level, till the time we don't see the index surpassing 37,000 on the upside, which is 15, almost close to 1,100 points on the upside. There is no signs of trend reversal what we can see at the current levels. Yes, we have seen some buying interest from the lower levels for the indices. The support on the downside for the indices is at 34,000. So 34,000 is a very critical support. We need to hold that mark in order to at least see some pullback on the upside. So it's broadly stuck in a range. 37,000 is an important hurdle from where we have seen multiple rejections. We need to cross that level to see the trend reversal. Then probably you can see a clean move in IT towards 41,000 on the upside. Coming back to Wipro here, so yes, Wipro again has seen some buying interest at the lower levels, but we are not seeing any follow-up move coming in. Again, for Wipro, the resistance has been that 255, 260 zone. That has been the rejection zone, and till the time we are not surpassing that level on the upside, we might continue to consolidate on the lower end. So the lower end support for Wipro is the 230. And the resistances plays at 255, 260. So this is a 30-point range. We can expect Wipro to consolidate in this range. A breakout or on breakdown on either side will have trending moves.
Okay, so that's with regards to where the IT pack as a whole goes. Another stock now that is going to be in focus is PVR Inox. They've reported numbers. Let's quickly look at what the stock is doing in trade today. From the day's highs, it's receded. There is some correction that has come in the stock now down nearly 1%. And what's interesting overall in terms of PVR, Sharad, is what they're doing in Bangalore.
Well, that's very interesting, and I think this is the first opening with a dine-in option. And maybe the cuisine will be much more bigger now?
Probably. I mean, you're talking about in-house cafes, which is, in some locations. You're talking about PVR Director's Cut, which is another aspect where your luxury dining is what you're looking at. So snacking, luxury dining, in-house cafes.
So movie becomes an experience or experience.
Exactly. Yeah, I mean, that's what we need to see.
Yeah.
But let's first head across to Vansh to take us through what we should be watching out for and what should we be asking the management. Vansh, over to you.
Well, thank you for that, Hiral. So yes, the company, the interesting company has been in expansion mode. Net 22 screens have been added in quarter 2. 40 are planned for second half of FY26. 50% of the new screens will be under the FOCO model, that is the franchise-owned and company-operated model. Also, if we talk about some of the movies, now the higher grosses during the quarter was Sayara, Coolie, Narsimha, and etc. Also, if we talk about the Q2 FY26 earnings of the company, now the revenue and PAT was largely in line, and the EBITDA and margins have beat the estimates of the analysts. If we look at the numbers, the revenue was up by 12% at 1800 odd crores. The EBITDA is up by 27% at 600 odd crores. The margin stood at 33.6% versus 29.5%, and the net profit is at 106 crore versus a loss of 11 odd crores. So clearly a positive set of numbers is what we are penciling in for this particular counter as well.
So a positive set of numbers is what you should be watching out for from going ahead as well. But let's get in Ajay Bijli, Managing Director, and Gaurav Sharma, CFO at PVR Inox. Welcome to the show, gentlemen, and always a pleasure to speak to you. Wishing all of you a happy Diwali from NDTV Profit.
Happy Diwali to you as well.
When we just started off this conversation, our initial interaction and banter within the studio was, whether we should be moving away to Bangalore to enjoy the food or the movies. What should it look like? And if it comes down to Bombay, what is that going to look like? So I think that's the key from here on. But let's start with the second quarter. I mean, we've seen good improvement that's happened in terms of the numbers if you have to look at growth. What's the roadmap ahead? Are you seeing a similar trend continue? Because in terms of profitability, again, a good jump that has come in. We've almost, gone to 510 odd crores, which is a significant turnaround if you have to compare it to the first half of FY25.
Well, it's, cinema has always been something which is a mainstay of out-of-home leisure activity in India. And of course, post-COVID, it did take some time for everybody to realize that out-of-home entertainment has got its own place in the sun, and watching movies at home or TV shows has got its own place in the sun. So I think it's taken a lot of time, but now I think that that debate is over. And people are back. The content makers are making films which are more content-based, script-based, rather than just big blockbusters. Of course, we like blockbusters as well. But this quarter has seen some of the smaller movies, which wasn't something that people anticipated will do so well, like Sanyara, Mahavtar, Narsimha, so many smaller movies which have done exceedingly well. And that is what is very heartening. Of course, you had your War 2, you had your Coolie, which have also done close to 300 or over 300 crores. Hollywood has bounced back in a big way with F1. Jurassic Park, Superman, Conjuring, which is a horror movie which did very well. So I think the momentum is back, and this momentum is bound to continue now because we've entered the third quarter as well with Kantara 2 now, which will probably be the first 500 crore movie of this year. But we've had 22 movies this year, which has never happened post-COVID, in which have crossed all 100 crores mark, and not all of them have been blockbusters. So I think both the consumers, the fatigue factor of staying at home and watching movies on the small screen, that has made them go out now because that's what everybody wants to do. And also the content makers are making movies which are something that are very, very attractive, and the stickiness of these movies is there with the consumer. So I think the business has got its momentum back now.
Well, yes, that's a very important statement coming in from Ajay sir. But Gaurav, let's speak about some numbers here. The margins has risen to almost 33.6 odd %. Now the question remains is, what are the other value-added margin products you are looking at? Of course, I had also been to your cinemaplexes, and the new services actually coming out, be it corporate bookings and other things as well, which are high-value margin products, even though they might be small. But now let's look at the margin impact. Now it looks like a normalization is there. This quarter itself, we are going to see a festive releases coming up. But Gaurav, what will be the margin outlook looking like? What will be the levers?
So, we typically don't give outlook on margins as such, but just to, share the key levers in our business. It's a high operating leverage business. Of course, footfalls and occupancies drive the biggest margin increase and expansion. Apart from that, we are taking a lot of initiatives to drive footfalls. We have launched something called as Blockbuster Tuesday as an industry-wide initiative, where Tuesday ticket prices are available at lower price. Similarly, on F&B, now we have launched something called as F&B and ticket bundle, where a consumer can buy it both together at a cheaper price, and that has led to expansion and uptick in consumption. Advertisement revenue is one important line item in our business. And that goes straight to the bottom line. That's been growing at a very fast rate. When you look at other traditional forms of media, cinema advertisement is in fact an outlier which has grown every year. And we have delivered the highest Q2 and first half ad revenues. And the outlook for the rest of the year is also very strong. Typically, October to December is a period when a lot of festive vibe is there, and there's buzz, and therefore the media sales and advertisement revenues go up. So, yeah, I think some of these things will collectively drive expansion in top line. With a control on cost, we are pretty, confident that, margins are going to be intact or grow from where we are today.
That's interesting, Gaurav. You mentioned about Blockbuster Tuesday. I mean, the success is there when you talk about value-driven initiatives like this. But what happens is it drives volumes but affects your average ticket price strategy. How do you see that normalizing happening? Because stabilization in terms of average ticket prices, I'm sure from a business perspective, is absolutely important. And I'm sure Ajay must be behind it as well, that no, that cannot go down from here on. And secondly, you have to drive your spends per head as well. And that's the reason why you have your F&B to drive it. What is that strategy going to look like? I think I would want to hear both from Ajay and Gaurav on it.
Well, the first half, if you've seen a subdued increase in ATP, it's also because, as I mentioned earlier, not too many blockbusters came. So obviously blockbusters are where, people are ready to pay a higher ticket price as well, because they know that the movie has been made on a bigger budget and stuff. So those are now lined up, from Kantara to Avatar, Alpha, Dhurandhar, and, Border to the 120 Bahadur, which is a Farhan Akhtar film. So a lot of Toxic is coming later. So I think first half, as I was mentioning earlier, hasn't seen too many blockbusters other than Coolie and War 2. Mostly, so therefore the ATP has been where it is. And also because this year our focus was to get people back in, get as many people as we can. And therefore these Tuesdays and bundling up of ticket prices and tickets and F&B was done, because we needed to get that habit back. But I think going forward, when the year ends, when you look at first half and second half, and with these blockbusters coming in the second half, you'll see that the increase in ticket price and SPH will be healthy.
Well, very interesting perspective on that. But Ajay sir, I have a query because everybody is chasing experience and you're a man who creates experiences. The question remains is, this experience, will it come to tier 2, tier 3 cities as well? Because if we are seeing a larger than life movie, we want to see it in an IMAX, we want to see it in a good sound surround system. So what are the plans for that?
You see, India is such a disparate market, it's such a heterogeneous market that, we've been in this business like personally 35 years now. And you have to be very careful that a quality solution is provided to the demographic where you're making. So we have cinemas from price point to 150 rupees or even 100 rupees to as high as 1500 rupees. But we don't want to compromise on the experience. So experience just doesn't come with, for example, IMAX, because IMAX is still very Hollywood driven. But we have a format called PXL, which has got a similar technology. So I think the most important thing, even in smaller towns, will be digital sound. It has to be, laser or 4K projection systems, screens which are really big, floor to ceiling, wall to wall, seating comfort, no compromise on F&B. I think we have to be. If this is that experience which people can't get at home, now whether you're in a big city or a small city, so there will not be any compromise even when you go to smaller. But we have to be careful about the formats. I think these formats are very Hollywood-driven formats. Of course, some of the movies are Indian films, regional films are also getting converted into IMAX and 4DX and all the other formats. But I think still not too many films come on IMAX, and therefore it is still a very much an urban big city phenomena. But as I said, we've got equivalent formats which are as powerful, which are for the smaller towns.
Ajay, one more question I have for you is the smart screen rollout and impact in terms of business, because that is something which is 35% cheaper in terms of food and tickets is what my read is. So once it gets fully operational, what is the strategy with regards to scaling this up? And then probably Gaurav could give me a response in terms of what the target could look like with regards to contribution, and what is the direction that PVR is then taking?
Well, there are still lots of pockets where cinemas are not there. If you look at the last Wave conference as well, people spoke a lot about postcode, but we don't believe in only postcodes where cinemas are not available. I think the right kind of audience, quantity and quality, and their propensity to go out also have to be there. Otherwise, there's no point creating an infrastructure in a tier 3 or a tier 4 or tier 2 town and suddenly not have any people to reach the threshold occupancy levels that you need. But our rollout this year is going to be 100 screens. By the way, first half we've already opened 42, and the rest of the year is where about 58 odd screens. So 100 will be the screen count. But why we are very excited about the smart cinema growth is because this can take our number of screen count to almost double of what we normally open, because now we'll be penetrating more cities. But again, focus on ROI, ROCE, demographic profile, is very critical, and we just don't want to do something for the heck of it.
Thank you very much, Ajay sir and Gaurav sir, for giving out your views for PVR, and wishing both of you and your entire PVR family a happy season's greetings. But let's move on.
Thank you. Same to you.
Thank you. Thank you.
Well, let's move on. Kunal, PVR, the stock itself has seen a good up move as well. And this year, the numbers are also coming. Company has transformed from losses to profit. Kunal, what do the charts suggest? And you could give me something like a holding call for medium-term basis. I don't want an intraday call on that, but something on the medium term on a holding basis. Does it look attractive on the charts?
For PVR, already we have seen a massive correction from the lower levels. Now we are seeing buying interest coming back from the lower levels. And here the rejection zone for the stock has been around the mark of 1140. 3 times the stock have tested that mark, but again we see selling pressure from those levels. So there are sellers who are active. I think once that is taken out, then probably you can see that leg of up move coming in for the stock. So overall, the structure has now is becoming positive from the negative side. But still, we need a confirmation above 1145 to be precise. Once that is taken out, then one can go aggressively long on a closing basis. This I'm talking about. The stock needs to close above 1145 on the upside. Once that is taken out, one can go aggressive long. Again, your stop loss on the downside will be 1080. And then one can look for positional targets on the upside. At least first target should be 1270 on the upside, and the next target should be 1320. So wait for a close above it, and then probably one can go aggressive long on PVR.
So that's PVR Inox. Let's just quickly pull up JSW Steel as well. The company has reported numbers, revenue slightly above estimates, wherein the EBITDA is above, margins are in line, your net profit is below estimates. There is the reversal in the Supreme Court ruling to liquidate the BPSL assets, and lower coking coal prices offer partial cost support to the company as well. The margins have come in at around 15.8% versus a 17.6%. If you talk about the consolidated crude steel production, that is up 9%. India operations, again, the production is up around 9%, and capacity utilization at India operations stand at 92%. The stock seeing some bit of pressure as we speak. Let's look at the outlook. It's more cautious in terms of the 2026 outlook, and that is what I think the street is not taking positively. And they've said that the continued geopolitical uncertainty is something that could weigh, and the elevated tariffs are likely to weigh with regards to where momentum goes. In terms of the factors that we should be watching out for, from here on, the steel realization and the cost guidance, the volume guidance for FY26, and the update when it comes to expansion projects. Very quickly, Avinash, any view that you hold in terms of JSW Steel? And secondly, you have Hind Zinc, who's gone ahead and cut their guidance as well with regards to FY26. That's the latest commentary that we've been picking up. Both these names, a quick update.
No, I think JSW Steel here numbers have been a little disappointing. If you look at the drop in the profit, a 25% drop is quite significant. And I think, as you mentioned, the outlook also looks a little hazy. So my sense is that even the third quarter numbers are going to be soft. And I think, the stock is available at not very cheap kind of valuations. It's risen quite significantly. So probably some amount of profit booking could come in. I think, structurally we are positive on the metal companies, something like a Vedanta or typically Hindustan Zinc, which you mentioned. I think Hindustan Zinc, the bigger trigger was the continuous rise in silver prices. But we'll have to see what kind of numbers come in the third quarter, because typically even if volume growth is maintained, silver prices themselves are going to give a big elevated push to the profitability level. So I think obviously this guidance cut is definitely surprising and a little disappointing. But I think overall, I think at 500 odd levels, I think this could be a good value pick for a slightly medium term kind of scenario, because our sense is that silver prices will continue to keep rising. Rising industrial demand and obviously other kind of reasons is going to keep the silver metal pretty buoyant. JSW Steel is a hold. I wouldn't suggest any fresh buy at the current level.
Okay, so that's with regards to Hind Zinc and JSW Steel. But let's quickly slip into a short break. On the other side, we'll get to the top buy today, sell tomorrow picks as well. Stay tuned.
A powerful gathering of global leaders and thinkers Voices that will decode the edge of the unknown. NDTV World Summit 2025, 17th and 18th October on the NDTV network.
What does Diwali mean for you? Lights, crackers, sweets, parties, family, profit.
Join us this Diwali
as we add more sparkle to your portfolio,
more punch to your balance sheet, and more
Welcome back to India Market Close, and we are at NDTV Profit. Small cap space is also buzzing. Of course, not so much as benchmark indices, but there are certain stocks which would be in spotlight. Anushi is here to help us with the list.
Well, thanks for that, Sharad. So a couple of stocks which you should be watching out in trade today. Now here we are looking at higher volumes as well for some counters and some buzzing on the back of results as well. If you just look at the volumes of the counters that I'm talking about, Rolex, Ring, Space, Digitech, Chrysac, along with Marine Electricals in focus, you're looking at volumes to the size of 3x or to the size of 15x as well. This is the overall in terms of volumes that we are seeing compared to its 1 month average that we are looking at. Just about the companies that we are talking about, first of all, Rolex, Rings in focus. Now it's an auto component maker specializing in bearings and piston rings. If you just look at the financials, their revenue stood at about 1,154 crore as in comparison with 1,200 crore or so in versus FY24 number if you are taking in context. Margins have remained majorly flat, while majority of their business comes from the export side of it, about 53% of contribution that we are seeing. Pace Digitech is another counter that we should be focusing on. Now what we are seeing here is that the company offers telecom infrastructure solutions. It has about a 25 plus of a gigawatt of BESS tenders in India. This is a huge plan that the company has. It is steadfasting its presence in this particular area as well. In fact, they are saying that the Bangalore plant can generate about 3,200 crore of revenue going forward. So that's an interesting update from Pace Digitech. Chrysac is in focus on the back of the second quarter numbers. Just on the sequential performance, if we see, revenue was down about due to the generally weak quarter numbers which are expected. However, margins did see an expansion which was there. The company processed about 100,000 applications versus 276,000 seen in FY25. Last one on the radar is Marine Electrical. Here we are looking at trading volumes tripling versus its 20-day average. Stock up about 8% in the last 5 trading sessions. About the company a little bit, the company is one of the largest LV and MV switchgear manufacturers, and it is an integrated technical service providers in fields of electrical automation as we speak. So these are a couple of small cap stocks which were in focus in the small cap buzzer show as well.
Thank you very much, Anushi, for this. But in the small cap space, of course, Avinash sir has a very keen eye in the SME space as well as the small cap space. Good afternoon, Avinash sir. Rolex Rings volumes are almost 16 times, and even Pace Digitech, a lot of news flow coming in during its IPO. It's a recently listed company as well. Chrysac and Marine Electricals. If you had to pick the best stock among these 4 names, which would be and why?
So I think, Sharad, nice to talk to you. See, I think within this 4 stocks, I think Marine Electricals looks very interesting. It's a defense and data center ancillary supplier kind of component player. Very strong order book. The company is sitting on an order book of almost 400 crores plus. And I think the kind of opportunity we see in the defense space, especially in the marine, space where the company caters to majors like Garden Reach, Cochin Shipyard, Muscat Dock, I think they are very well positioned. And I think the numbers clearly depict the fact that the second half is going to be equally strong. My sense is that even at these levels, the risk reward could be very good for investors looking over the next, say, 12 to 15 months. So I think, marine electricals definitely is an attractive play at the current level. Crysac also looks pretty interesting. They operate in a very interesting space. And despite being a weak quarter, my sense is the second half is a period where possibly you could see better traction both on the revenue and the profit side. I think not many companies operate in this space, especially in the listed category space. So this could be also be an interesting bet. And I think, once the market settles down, you get a small dip or a correction. These could be companies which could be added to your portfolio. I think risk reward for both these companies, Sharad, could be quite interesting over the next 12 to 15 months.
Okay, so those are few of the names that you're watching out for from the small cap buzzer space. In fact, with all of these names, what is interesting is the kind of moves. I mean, Crysac, obviously, I don't think so anyone's really going to get an opportunity to enter this counter. But Kunal, a quick view, anything that, anywhere where you are seeing some bit of value emerge from the names that Anushi took us through?
I think marine electrical looks interesting on the chart perspective. So what we have seen on marine electricals, the rally what we have, which started from the lower end around the mark set August 2025 from the level of 165, 166. We have seen the first move kicking in, and then we saw consolidation at the lower end. So that was the second leg, and now the stock is ready to enter into its third leg, which is generally the fastest leg. So we expect this momentum to continue on the upside. Even on the weekly charts, there has been heart of high bottom formations coming in. And once we break out over this mark of 240 on the upside, expect strong move towards the mark of 320, 330. So I think over here, the risk to reward again looks favorable. Any dips would be a buying opportunity. The support for the stock on the downside is placed around the mark of 190. So till the time 190 or 95 is not taken out, the view continues to be on the bullish side.
Needs to be bullish till a certain level is not broken on a marine electricals. I missed that one. But what remains in focus is the banking sector, because major banks are set to release their earnings tomorrow. We have Vishy who brings us everything that we should be expecting. Vishy, I mean, I don't know if you're going to sleep tonight, tomorrow. What is it going to look like from here on? 7 major banks that report numbers tomorrow. What is the expectation?
The expectation is me getting tired here. Just coming to the banking results, basically there are 2 major banks, HDFC and ICICI, announcing their results, but as well as, of course, Punjab National Bank also, which is a large bank, but not as big as HDFC and ICICI. But other than them, there's 4 mid-sized banks, Federal Bank, IndusInd, Yes Bank, and RBL all announcing their results. And there's a whole host of expectations. Of course, you're seeing some amount of focus on margin, some amount of focus on growth, but alongside that, information aside from the results will also be a key focus area. Let me take you through what each bank is going to bring to the table. HDFC Bank, the expectation is that margin contraction is going to likely happen at HDFC Bank. If you look at ICICI Bank, there the return on assets are likely to be weighed down by lower treasury gains. What we understand from reading what analysts have to say, Punjab National Bank, your strong advances and deposit growth is going to be the key focus area. Look at where Federal Bank is coming from. Now, of course, they have made a conscious push towards a higher return business. However, the rate cuts by the Reserve Bank of India might play spoilsport. So we'll have to see how exactly their NIM as well as other return ratios perform. If you look at IndusInd Bank, we have to see if is this a kitchen sinking quarter or not, because this will be Rajiv Anand's first quarter as the CEO of the bank announcing the results. Does he do further kitchen sinking, or are asset quality troubles of the past, accounting troubles of the past, and now we are looking at a new chapter at IndusInd Bank? That's something that will get clarified as the results come out. Yes Bank, again, fresh capital that's coming in from SMBC, but also growth path for the bank, because it's something that the bank needs to focus on. Earlier today, there was a news report that SMBC wants Yes Bank to focus a lot more on growth metrics. So that will be the focus. Lastly, on RBL. Now, of course, the results and the asset quality, all of them are important. But what is the most important is Emirates NBD and the stake that they're buying. We have reported exclusively that 60% equity stake to be bought for $3 billion. How that takes shape, what is the structure of that funding, all of that will get clarified once the board meeting ends tomorrow. So we'll find out more about that as the numbers come.
Okay, this is going to be interesting when it comes to banks. And I think the other key, what Vishy just mentioned right now, is the deal when it comes to RBL Bank, the stake sale that everyone is talking about. If anything that comes in terms of tomorrow's earnings is going to be crucial to watch out for. I think, Avinash, anything that you would want to add when it comes to RBL Bank stake sale?
No, I think as Vishy mentioned, the 3 billion deal is going to be a big trigger point. I think markets would definitely like that such a kind of deal happens at a significant premium to the market price. And I think that would obviously, trigger more interest in the bank, considering the fact that this could be a very big M&A. My sense is that we'll have to wait and watch. But if it happens, then I think that could be a very near-term good re-rating trigger for the stock. I think on the numbers, my sense is these are going to be pretty encouraging numbers as compared to Q1 in terms of asset quality, in terms of the loan book growth and the profitability. But I think, yes, clearly the deal which could happen is something which the market should await after tomorrow's board meeting.
Well, interesting, Avinash. But of course, we have spoken about the Nifty banking majors, but Reliance, that is the earnings to watch out for today. It will be coming post-market hours, roughly between 7 to 8:30. But Reliance Industries preview, it's expected to be, you could say, a downward quarter coming in, subdued quarter across the segments. Let's just pull in the important numbers, which are very important to track. Revenue is expected to be around 1.7% up, while EBITDA, that's expected to bump up to 5% odd. Margins, slight increase if you look at it on a sequential basis, but net profit, that is where you would see the downtake coming in. Now, segmentally, if you look at it, retail EBITDA, minor gains of 2.7%. Retail revenue, that's going to be impacted by almost 7% odd. And if you look at it, net profit drop is expected in the last quarter. And there's a one-off gain related to the sale of stake in a listed investment as well. That's why the numbers were high. That listed investment is Asian Paints. OTC segment, they are expected to report growth as the last quarter was impacted due to maintenance shutdown, and retail down is also expected to be sequentially down in operational metrics in a seasonally weak quarter as well. Oil gas explorations, if you look at the screen, EBITDA is expected to be down owing to lower realizations and volumes, but not much.
One question I have for you on this one is just ahead of the numbers. Today you're seeing a strong move. I mean, a little over 1%. Last 5 days, 3.5% is the up move that has come in the Reliance. And the last 1 month, the stock has remained absolutely flat. YTD as well, 15-16% is the kind of returns. And in the last 1 year, 4.5%. What should the street look at, I think?
Well, the street was expecting in the AGM there would be a big announcement coming in, at least for the Jio's IPO and a lot of other things. But that has already been factored in. But of course, markets move on earnings. And if that is not coming in, this becomes an overhang in the stock. And that is something which we'll be looking out for. And Reliance also, but of course, going up. But you could say there might be volatility in the counter as well, because you never know, because the earnings is expected to be subdued.
Kunal, a quick view in terms of what are charts indicating ahead of the numbers?
I think ahead of the numbers, we are seeing bullish undertone in the last couple of trading sessions. Now for Reliance, on the higher end, 1430 is the level to be watched out for. That has been generally the supply zone, and we have not been able to close above it. So once we get a close, say post the results above 1430, you can say probably the short-term worst is over for Reliance, and probably we would be heading towards 1500, 1530 on the upside. But for that, a close above 1430 is very important. That has been a strong rejection zone for Reliance.
With regards to Reliance, we'll go to Avinash on Reliance, but before that, on to a special segment, Profit Intelligence. We're talking about the top gainer on Nifty 50, which is the paints sector, Asian Paints, that is in focus. Anushi brings us all the intelligence around it. Anushi, over to you. I know you don't track the sector pretty closely, but this is some good work that we are picking up.
Right. So, a couple of triggers, Hiral, that we are looking at in terms of what's happening with Asian Paints. Not just Asian Paints, a lot of these paint companies that we are seeing are buzzing in trade today. Now, just if we look at the chart and the intraday high of these particular counters, you're looking at gains of more than 4% for counters like Asian Paints as well as Kansai Nerolac as well. So, that's with regards to this. But other counters such as Indigo Paints, Berger Paints also seeing an up move of around 2% or so. So, what's happening? That's the main question that we want to ask, and specifically for Asian Paints, considering that if you just look in terms of this kind of an intraday high that we've seen so far, it's the biggest single day jump that we've seen since March 2022 level. So that's a big update that's coming from Asian Paints. In fact, if you just look at the volumes also, they've recorded the biggest single day jump since this since the 1 month volumes as well. It has also reclaimed its 5-year average P, currently trading at similar levels is also what we are looking at. But let's see overall the key triggers that we are speaking about. First factor that we are seeing is falling Brent crude prices. We'll talk more about detail in terms of what's happening with the crude oil prices. But apart from that, we are looking at a jump up in terms of the festive season demand as well. And with the company's highest share in the urban market, that is a particular interesting area that we are watching out for. Institutional interest is also seen from DII mix also. We'll talk about that in the shareholding pattern as well. And biggest market share in urban markets, and with higher demand revival now with the onset of the festive season, is another positive that we are looking at. What is important is also their new facility in the 2.65 lakh total metric tons of facility that we are seeing has also commenced production. So that is another key positive that we are seeing. But if we just look at the crude oil prices levels, we've seen this at around $61 a barrel. Now it has continued to see these record lows, 4% down this week, 18% down in this past year. But how would this falling crude prices benefit a company like Asian Paints? Now, if we just look at the overall cost, input cost of this, 35 to 40% is the kind of contribution that comes from this particular segment as well. See, that is the kind of mix that we are seeing for these paint companies. So this would directly result in margin expansion and would be a boost for profitability going forward. So that's a key positive aspect that we are looking at. Apart from that, if you are looking at the shareholding pattern also, while the promoter stake has remained absolutely flat, there's no such change as there. It's the public share that has gone down to 14%, with DI is now inching upwards by 5% in this 1 quarter itself. So that is another interesting part that we are seeing. Coming quickly to the game of valuations, if you just look at the multiple, 81 times was the high PE levels that we've seen. Now in 2025, the levels have come back favorably again. So fair valuation game is what we are seeing. How analysts are predicting this stock? We are looking at an overall neutral view with about a 4% of a downside with so that's with regards to that. But the stock has absolutely not done so well, with higher competitive intensity as well. 5 years return being just 23% or so. So that's the overall picture that we have for Asian Paints and the other companies as well.
Thank you, Anushi, for that. Does this become a re-rating candidate is the question from here on. Avinash, quick view in terms of Asian Paints and Reliance Industries, who actually paired their stake in Asian Paints in the previous quarter, because of which this time we are going to see a downtick in terms of profitability to the tune of 26%. Both the counters, your view.
No, I think, Hiral, you cannot look at this performance on a like-to-like basis. I think that Asian Paints deal needs to be excluded, from the operational earnings. My sense is that Reliance could spring a surprise. Normally, most analysts are wrong on their predictions, and I think you could expect some sort of positive surprise coming in. But yes, I think even if the numbers are flattish or slightly negative, I think the second half looks to be quite interesting. So, if there is a downtick in the price of Reliance, I would be a buyer, and I think we look at a fairly good long-term kind of value upside here. As Sharad was mentioning, the key trigger would be the business kind of, unlocking, and the retail business unlocking, which I think markets may have to wait for some time. And as far as Asian Paints is concerned, I think, Hiral, this is a stock where I think growth has completely gone away, and I think it's going to be very difficult for them now to maintain a steady earnings growth trajectory. Even at these valuations, I would still feel that investors should not stay invested here. I think there are better choices available. within the banking, within the capital goods and the auto component kind of sectors. So here I think the company is going to struggle with margins. It's going to struggle with volume growth and a lot of competition, from majors like JSW, typically Grasim, and where customers are going to benefit, but the company is definitely going to see margins getting more lower and lower. So I think I would keep away, despite the fact that it's a marquee leader in this segment. But yes, earnings growth, at least for the next 2 years, is completely ruled out.
Okay, that's with regards to Asian Paints and RIL. Very quickly, Kunal, BTST, STBT, which one would you go for?
Yeah, I would go for your Berger Paints. I think here the structure looks positive. There is an inverted head and shoulder breakout on the chart as well with volumes, and I think it has still more legs left on the upside. So that would be a buy for me as a BTST candidate, keeping a stop loss of 535, looking for targets of 555 to 560 on the upside.
So that's with regards to Berger Paints, which is on the BTST, STBT side. Very quickly, as we are about to close the markets, Avinash, anything that comes to your radar that we've probably missed talking about, but should be on someone's radar for a Monday opening?
No, I think clearly, Hiral, I think we have been telling our clients to look at, auto component companies. I think within the auto component pack, I think where possibly you could see a lot of traction as company like, Lomax Industries, a Bharat Forge, or typically even a Shriram Pistons. These are stocks which have not moved up significantly. But I think earnings numbers for the second quarter are going to be quite strong. I think we have seen a very strong bump up in passenger car sales, two-wheeler sales. So I think, once the traction in these two sectors happens, these are companies which are going to significantly benefit. And I think the real benefit would come in the third quarter. So I think not as a kind of a stock for Monday, but I think somebody who wants to accumulate value can definitely look at accumulating these shares, because my sense is over the next, say, 6 to 12 months, you could see a decent risk reward coming here.
Decent risk reward in terms of Shriram Piston. Bector Foods, Accutas and Force Motors, strong moves in today's session. Kunal, anything that could be a momentum buy?
I think Vector Food looks interesting on the chart. The stock had already been in a deep correction, and now we are seeing reversals on the chart. Today we have seen the breakout coming in with the volume-based buying seen on the chart. So I think here there is a positional buy which one can see from a short-term perspective. The support for the stock on the downside is placed at 1250, so that would act as a strong support. And I'm expecting targets of at least 1550 on the upside in the next 1 to 2 months.
Okay, what about Credit Access, Sterling Solar and Jindal Saw? All of these trading under pressure to the tune of almost around 5 to 8%. If you see Sterling and Wilson and Jindal Saw on the screens as well, the pressure has continued. Some, yes, reacting to numbers. Kunal, any strategy for any of these three names?
I think again, all the stocks have been already trading in a downtrend. So you can see the correction continuing on the lower end, but definitely not an exit at the current point, since we might have some technical bounce coming in all of these stocks. So bounces could be an opportunity where you can exit your long positions.
Well, thank you very much, Kunal and Avinash, for joining us. And of course, season's greeting to you both, gentlemen. But looking at the markets, it's closing, but two important events happened today. The first one, of course, Nifty. If you look at it, it tested its one-year high levels, and right now also it's up almost on 0.5%. It's near the 25,700 mark. That is something to look out for. Nifty Bank also, it's maintaining its gains, 57,700 plus in the day's trade. But Nifty Bank hit its record high levels, and that is something which is very important, especially with the private bank earnings expected to come in the weekend. Now let's look at how the Nifty Bank has actually performed. If you look at it, the Nifty heat map, let's get in to see the important constituents in the Nifty index. Asian Paints, this has been our profit intelligence as well, and see it's at the top. Right from the beginning, the stock was up almost 4% and M&M and Max Healthcare, both of them moving up in trade, both of them up almost 2%. Apart from this, if you look at it, it's even Stevens. If you look at it, when the advances and the decline, something to watch out for. But the IT pack, that has seen the maximum beating. This is where the changes start happening. The advance decline ratio, earlier it was almost similar, but see the divergence which has come in. That means there is more decline happening in the market as well. Also, let's look at the mid-cap 50 chart. That has not been that supportive if you compare that with benchmark indices. Let's pull in the mid-cap 250 index. That's near its day's low. No recovery attempts as well being made. Even the small cap is the same thing happening. Both of them ending in the red. Also, let's look at the BSE 500 stocks where the important contributions moves has happened. Whirlpool, that's our stock is up almost 11%. And Adani Group stock, Adani Power, also corporate announcement had come in, stock up more than 5%. Asian Paints we spoke about. Delivery there saw a reversal after profit booking in the last trading session. And amongst the losers, Credit Access Grameen, Sterling Wilson Solar make it to the list, and even Anupam Rasayan on back of weak earnings as well. So this is the entire broader indices, how the space has actually panned out. The sector specific move, if you see, FMCG has done well, and this was the second straight session we are seeing up moves coming in. Apart from this, if you look at it, Nifty Realty, Nifty Next, nothing much happening here, but Nifty IT, that's the biggest loser of the pack. The earnings impact coming in, be it Wipro or even if you could say HCL Tech, most of them falling in the trade as well. But net the day has been for the advanced decline ratio on the positive side. Now, apart from the market heat map, let's also look at what to watch. What should you be actually preparing yourself with? And this is an earnings heavy weekend. We'll talk on that. China loan prime rate, that's there on the low. On the global front, the corporate actions, Tech Mahindra, roughly 15 rupees per share, Oberoi Realty and Rama Phosphates and Tips also would be coming in here. Shares which will be exiting the anchor lock-in, two names come in. First is Euro Pratik Sales and the second is Traxon Tech, and you can see the numbers coming over here. Key earnings post-market hours today is Reliance Industries, expected to have a subdued kind of earnings coming in, but it's very important. Saturday, earnings heavy, two big names will be there. HDFC Bank, ICICI Bank, which you'll be tracking, but apart from that, there are roughly 7 big banks which you'll be tracking. Apart from that, Ultratech Cement, JK Bank, UTI, AMC also make it to the list. So it's a earnings heavy week, and of course you could say earnings heavy weekend, but this is it from India Market Close, and this is the total show for NDTV Profit. Thank you and stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
What does Diwali mean for you? Lights, crackers, sweets, parties, family, profit.
Join us this Diwali
as we add more sparkle to your portfolio,
more punch to your balance sheet, and more flavor to your investment. Because this festival of lights is also a festival of growth.
This Diwali, let's ignite your financial journey together.
Wishing you prosperity, success, and light.
From all of us at NDTV Profit.
He's a fifth-generation chartwala, with markets always on his mind. Mithilesh Joshi started investing when the Sensex was barely 3,000 and has been through days like Black Monday and Lehman Tuesday. Between puris and portfolios, he still checks the markets every day. And the best part, the same market experts who get their chart here often leave with a tip or two from him.
a fifth generation celebrity chartwala to an avid investor. We have on the show today Mithilesh Joshi. Welcome to NDTV Profit. In fact, welcome Pritesh, Chandan and Kush to NDTV Profit's Diwali chart party. This is going to be an interesting conversation today because we have invited you not only to enjoy conversations about markets but to enjoy the chart that Mithilesh ji is going to give us. Mithilesh ji, आप क्या खिलाने वाले हैं आज?
आप बोलिए, सारा मेनू आपके सामने है, भेल, सेव पूरी, पानी पूरी।
आपकी चॉइस पहले।
आप जो बोलिए, आप सेव पूरी ज्यादा बेटर रहेगा।
सेव पूरी से चालू करते हैं।
मीडियम तीखा मीठा, आलू कांदा सब।
वो हम बात करेंगे, आलू कांदा सब खाने वाले इधर। बट मेरा फर्स्ट क्वेश्चन आपसे है कि आप ये चार्ट बना रहे हैं, उसके साथ साथ हमने काफी कुछ सुना है आपके बारे में कि राम एंड श्याम है जो एक इन्वेस्टर बने हुए हैं। आपका क्या, आपने मार्केट्स में इन्वेस्टमेंट कैसे चालू की, वो बताइए हमें।
मार्केट में इन्वेस्टमेंट 1985 करीब मैंने चालू करी थी क्या, और स्टार्टिंग शेयर जो मैंने लिए थे IFCI, HFCL और प्रिज्म सीमेंट, उसमें पैसे बनाए।
और बट ये सब शेयर में आपने इन्वेस्ट कैसे किया? आपको ये टिप्स किसने दी?
अपने जो ग्राहक आते हैं उन्हों से, क्योंकि 3 जनरेशन तो हो चुकी थी हमारी, तो उन्होंने बोला कि बेटा ये शेयर ले ले, ये शेयर ले ले, प्रॉफिट आएगा। तो थोड़ा थोड़ा करके प्रॉफिट बनाए उसमें। फिर धीरे धीरे जनवरी और आगे फट गई, चलते गई, बढ़िया पटरी पे आ गई गाड़ी। पहले तो मार्केट की भाषा समझ में नहीं आती थी क्या, कि फाड़ के ले ले, तोड़ के ले ले, ये सब चलता था। अब वो धीरे धीरे समझ में आ गई। उस समय मारुति का भी मेरे को किसी ने न्यूज़ दिया था, कुछ 300 कुछ रुपया चल रहा था कि मारुति ले ले फाड़ के। अब वो फाड़ के ले ले, वो समझ में नहीं आया मेरे को, क्या फाड़ के ले ले। वैसे मालूम रहता पहले तो घर बेच के ले लेता, तो अच्छा पैसा बनता उसमें, लेकिन नहीं बना। जैसे बनता है वैसे बनता है।
ये बहुत इंटरेस्टिंग कहानी है आपकी, क्योंकि वी आर टॉकिंग अबाउट समवन हु इज एक्चुअली सेलिंग चार्ट, 5th generation, and he's the one who's actually started investing in the markets. Pritesh, at this point in time, he gave us some names right now. Maruti le lo, IFCL le lo, IFCI le lo, multiple stocks he mentioned about. How has your journey been in terms of investing? Let's start off that very quickly.
First of all, I would like to congratulate you because 300 रुपए में मारुति लिया था, आज का भाव देखा आपने। And one thing that we all need to understand that this guy has been patient. The entire family has been patient with markets.
Patient जरूरी है sir.
So that one thing that we need to understand. We need to follow it. It's one of the thumb rule that we need to adopt. In fact, been involved in capital markets for around 2 decades. You tend to study markets. You tend to understand markets. You tend to understand cycles. That's how opportunity comes in. So more important thing to understand is to understand cycles. That is what I feel. Because you need to be the right time to understand, to grab the opportunity.
वो right time तो आ जाएगा। चंदन जी, with coming to you as well, आपकी क्या कहानी रही है? Was this always an interest for markets?
5th generation बिजनेस आप समझ सकते हो, पेशेंस पेज। रियल में पावर ऑफ कंपाउंडिंग का सबसे बड़ा जो फॉर्मूला है कि आपको लंबे टाइम तक टिकना पड़ेगा, तभी रियल में रिटर्न बनता है। एंड आई थिंक मार्केट में भी यही है कि लंबे टाइम तक टिको। और मेरी स्टोरी की आप बात करें तो एक छोटे से विलेज से हूँ, राजस्थान से। आई थिंक मेरे फॉलोअर्स भी उससे ज़्यादा है, 12-13 हज़ार की पॉपुलेशन वहाँ पे है। बट हमेशा
विलेज की पॉपुलेशन 13 हज़ार है।
हाँ बिल्कुल। सो हमेशा ये इंस्पिरेशन था, कुछ करना है और कैमरे के पीछे नहीं रहना, कैमरे के आगे रहना है, न्यूज़पेपर पढ़ना नहीं है, लोगों को लिखना है ताकि लोग पढ़े। तो धीरे धीरे पावर ऑफ कंपाउंडिंग, वैल्यू इन्वेस्टिंग, स्टॉक मार्केट, तो धीरे धीरे ऐसा करते जर्नी आगे बढ़ी। एंड लाइफ इज वेरी इंटरेस्टिंग।
And what about you, Kush?
So I've been in the market. I've actually grown up, spending Diwalis in the BSc building. But what I'm interested in कि market में हर दिन कुछ नया सीखने मिलता है। हमारा जनरल परसेप्शन जो है वो ये है कि यहाँ देख के सुन के, किसी का सुन के आप मत लीजिए। यहाँ हमारे पास एक लाइव एग्जाम्पल है जिन्होंने एग्जैक्टली वही करके एक फॉर्च्यून बनाया इन स्टॉक मार्केट्स। हालांकि मैं अभी भी वो रिकमेंड नहीं करूँगा, बट दाद देनी पड़ेगी इनके पेशेंस की, इनके परसिवेरेंस की, कि इन्होंने इन्वेस्ट किया और उसमें लंबे समय तक बने रहे। तो कहीं ना कहीं इनका बिहेवियर जो है वो भी इंपॉर्टेंट था in terms of him making the kind of money he made in the market. So always a learning, in the markets. So
this is great, Mithilesh जी। जो एनालिस्ट टीवी पे आके सबको टिप्स देते हैं, टिप्स नहीं बोलूंगी, एडवाइस देते हैं बोलूंगी,
उनके घर पे जाता हूँ मैं।
उनके घर पे आप जाते हैं, करेक्ट। बट ये हमारे साथ भी जो जुड़े हैं, दे आर द वंस हु कम ऑन टेलीविजन टू एडवाइस investors which stocks you should buy, which stocks you should sell. आपने भी काफी लोगों की एडवाइस सुनी है,
अभी काफी को दिया भी हूँ एडवाइस।
आपने एडवाइस दी है, वो देखो उसमें भी पैसे बने होंगे। अभी ये बात
नहीं, मेरे नहीं, उनके बने,
उनके लिए अभी आपको सभी रजिस्ट्रेशन लेना पड़ेगा काफी जल्दी फिर। Everyone is talking about the time to invest in markets right now because we've seen that slowdown that has happened. Now is the time that churn should come in. When you're talking about that churn, again, the conversation is gold, silver, itna paisa ban raha hai. Should you invest in gold, silver, or should you invest in equity? Housewives are always coming and saying right now, I think our portfolios are much better than the husbands. I'm sure all of you all will agree to that conversation as well. If you're tracking gold, silver and equity right now, where are you seeing potential, Kush?
So I am firmly an equity guy. Always have been, always will be. तो गोल्ड सिल्वर में अभी रैली आ गई है और बिल्कुल एक एसेट एलोकेशन के नाम पे होना चाहिए, बट पैसे तो इक्विटी में ही बन रहे हैं।
पैसे इक्विटी में है। आपको क्या लगता है मिथिलेश जी, आप भी आप शेयर बाजार पर आप भी दिवाली तो दिवाली सोना खरीदते हैं, सिल्वर खरीदते हैं?
जिस समय खरीदना था वो खरीद चुके, अब नहीं खरीदना, अब वो गले के ऊपर आ चुका है। अब ये इस गाड़ी में चढ़ना बोलो तो मेरे बस की बात।
तो आप क्या करोगे? आप क्या आप सोना और चांदी बेच के अभी स्टॉक मार्केट में लगाओगे?
अभी फिलहाल नहीं, एज अ प्रॉपर्टी बना लेंगे।
अभी रियल एस्टेट बना लोगे, ये आ गया नया एसेट क्लास। प्रितेश, at this point in time, we're talking about, you're already eating what, bhelpuri?
Yes.
Now bhelpuri.
It's my second plate.
It's your second plate of bhelpuri. Very good. It's the spicy one or the sweet one?
Spicy one. I told him.
So when you're talking about spicy bhelpuri as well, tell me one probably sector or stock where it's been a spicy sector for you right now, and spicy being something which has been really hot.
हाँ.
And sweet being कि हाँ ठंडा चल रहा है, गाड़ी चल रही है. Which has been that spicy investment
right
bet?
Now, we discuss about gold and silver. But I think one space I think we need to consider, that is consumer discretionary basket. Because, we keep looking at intermarket analysis, we keep looking at ratios. So the consumer discretionary versus the FMCG, that has given a 3-year base breakout. So when I say 3-year base breakout, it means that discretionary stocks will outperform. So the right time to be in FMCG space, discretionary space में काफी opportunities है. So when I talk about discretionary basket, apparels है, retail है, we have real estate, autos, ancillaries, several things. बहुत बड़ा basket है. So I feel that even we have premium products, something like Titan which is not moved up. I think something like Urban Fashion, not done anything. There are several names popping up on my list. So I think there are several counters which can do well if we have a good horizon of 2 years or 3 years. I think they can do really well from here.
That's an interesting bet over here. मिथिलेश जी, आप प्रितेश की एडवाइस को क्या बोलेंगे? वो बोल रहे हैं कंजम्पशन थीम पे प्ले करना चाहिए, जैसे हो गया टाइटन जो घड़ी बेचती है, ट्रेंट हो गया जो कपड़े बेचती है, अपैरल्स है काफी से, जैसे वी मार्ट रिटेल है, ये सब कंपनीज है जो कपड़े, गहने, ये सब चीजें बेचती है। आपको लगता है आपने सुना है? हाँ। आपने किसी से सुना है जो इन्वेस्टर्स आपके पास आके चाट खा के जाते हैं?
हाँ जी, वो बोलते हैं ना, रोटी कपड़ा मकान, ये 3 बिजनेस में आप इन्वेस्टमेंट करो, आप एनी टाइम आप ग्रो करोगे। जैसे बिल्डर लॉबी हो गया, रियल एस्टेट हो गया, क्या, और जैसे आप बता रहे हैं सर जी कि टाइटन है जो घड़ी वगैरह चल रही है आजकल, तो बहुत अच्छी मॉडल्स आ रहे हैं, तो नए लोग नया मॉडल चेक करते हैं, तो हिसाब से
So it's a very interesting way of looking at things, because he mentioned roti kapda makan. So point is here, we were discussing about discretionary space.
Correct.
It's a very, very broad index.
And from that he's narrowed it down to roti kapda makan.
Yes, that's right. That's right.
And that is, yes. Yeah. Chandan, what will you have to say? You're talking about roti kapda makan. Again, consumption. But how are you looking at it?
So I need to, actually the basic fundamental will remain same, roti kapda makan. But now it depends roti kaun se. Because the lifestyle has changed. India is now the country of 145 crore और 65% पॉपुलेशन है वो 35 ईयर से नीचे है, 50% पॉपुलेशन है वो 25 ईयर से नीचे है, तो 25 साल वाले है ना, वो रोटी घर का नहीं जमेगा उनको, आधे टाइम उनको
पिज्जा
बिल्कुल। सो
आप हो क्यों नहीं स्विगी के ज़ोमैटो पे?
35% कौन देगा?
So I think ये जो इनका पेन पॉइंट है ना, that is the gain for these companies. So I think new age business will do well. Somehow India is the leading country in terms of consumption. We are the number 1 in terms of population. We might be the number 4 in terms of our market cap. So I think any company which is related to consumption will do well. So you can talk about the companies like Eternal, राइट
जोमेटो हो गया,
जोमेटो आई थिंक आजकल चाट के लिए बिल्कुल सर के पास तो जाना ही चाहिए, बट आप घर बैठे भी चाट खा सकते हो, जोमेटो, स्विगी, इटर्नल, पेटीएम।
बट जो ठेले पे जाके चाट खाने की मजा है ना, वो घर पे बैठ के नहीं
बिल्कुल
है।
बिल्कुल नहीं है। बट देखिए हिरल, हम बात कर रहे हैं उन जेन जी की जो ब्लिंकिट के जनरेशन में है, जिनको 8 मिनट से ज्यादा वेट नहीं करना पड़ता है। सो आई थिंक इंडिया इज हेडिंग टुवर्ड्स दैट सिनेरियो।
घर पे पानी पूरी तोड़ के, मसाला डाल के, मीठा और खट्टा पानी लेके बनाना भी पड़ता है ना।
बिल्कुल, सो आई टोटली बिलीव। और खट्टा मीठा आप बात कर रहे हो, मुझे आपने एक सेक्टर की बात की, खट्टा मीठा में डिफेंस रखना पड़ेगा, क्योंकि आप जब इंडिया की बात कर रहे हो,
डिफेंस खट्टा होएगा कि मीठा?
देखिए मिक्स है, डिफेंस खट्टा मीठा मिक्स है, जियोपॉलिटिकल कंसर्न है। देखिए जीएसटी बूस्ट है तो मीठा है, बट यूएस प्रेसिडेंट का टेंट्रम हो जाएगा तो थोड़ा खट्टा भी हो सकता है। सो वो भी संभालना पड़ेगा मार्केट में।
तो अच्छा, you know, Chandan just spoke about a khatta meetha combination. We are talking about defense, which does come in, consumption, which is coming in, lot of sectors here, right? According to you, which is that khatta sector that you would look at, and which is that meetha sector right now?
So, very frankly speaking, the sectors that I think might not do well right now, perhaps realty, auto, because it's already done well. But आने वाले समय में there is a good chance that you will see something like banking and a financial sector do well, even defense for that matter would do well. So I think ये कुछ sectors हैं जहाँ पे अभी भी steam बाकी है।
मिथिलेश जी, सब लोग हमें काफी एडवाइस दे रहे हैं कि कौन सा सेक्टर खट्टा होना चाहिए, कौन सा मीठा। आप अभी तो एक तीखा भेल बनाइए हमारे लिए, बट उसके साथ मेरे को बोलिए कि आप जो इन्वेस्टर्स आते हैं आपके ठेले पे, आप जिधर सेलिब्रिटीज को खिलाने जाते हैं, आप काफी कुछ सुनते रहेंगे। उसके हिसाब से आपने क्या सुना है कि कौन से सेक्टर में ऐसा इन्वेस्ट करना चाहिए, क्या करना चाहिए? कुछ आपने सुना रहेगा।
रियल एस्टेट अभी बूम है, रियल एस्टेट बूम है, और जहाँ तक ये सोना और चांदी जो भाग रहा है, वो हिसाब से उस पर भी थोड़ा सा चलना चाहिए।
तो सोना, चांदी, रियल एस्टेट। चंदन, रियल एस्टेट स्टॉक बाय करना चाहिए कि घर बाय करना चाहिए? अभी क्वेश्चन वो है।
घर तो नहीं चुका है।
बिल्कुल देखिए, मेरे हिसाब से डिपेंड्स करता है कि आप कौन से लोकेशंस की बात कर रहे हो और कौन से एसेट्स क्लास की बात कर रहे हो। देखिए गोल्ड सिल्वर का पिछले लगभग 1 साल से काफी बड़ा मूवमेंट हुआ है, राइट। और जैसा कि आपने पहले भी पूछा था कि इक्विटी में रहना चाहिए गोल्ड सिल्वर, तो मेरा ऐसा मानना है इक्विटी तो एवरग्रीन रहेगा। गोल्ड माइट बी ग्लिटरिंग नाउ, सिल्वर इज शाइनिंग, बट इक्विटी इज लाइकली टू बी एवरग्रीन। आप 1 साल मत देखो, 5 साल देखो, 10 साल देखो, 20 साल देखो, रियल में पैसा इक्विटी में बना है, बट आपको एसेट एलोकेशन करना चाहिए। और इधर ये जवाब मैं आपको दे सकता हूँ, घर पे जाके ये सब नहीं बोल सकता।
ये आई एम श्योर वो देखेंगे भी, पर उसमें वेरी इंटरेस्टिंग आपने बोला, यू मेंशन्ड अबाउट इक्विटी राइट नाउ, राइट? Now with equity, the problem over here is, in fact, you were at one of our events, Ignite, we had Nilesha of Kotak who said, from Nifty 50, more than 10 companies are like dinosaurs with their tails on fire.
Exactly.
Correct? You're talking about वो बड़ी कंपनियां जिधर क्या मालूम है problems, we don't know yet. In relation to this, let's look at broader markets. हर रोज हम देखते हैं कोई कंपनी है जो 10% बढ़ी, एक वीक में 50% बढ़ गई। Is there more steam left in broader markets or is it in the benchmarks?
So हिरल, उस इग्नाइट इवेंट में मैं भी था, एंड व्हाट अ फैंटास्टिक इवेंट यू गाइस ऑर्गेनाइज। और नीलेश जी ने काफी अच्छा मार्केट के बारे में बोला था। मैं आपको 2-3 डेटा फेक देता हूँ कि अभी तक इंडिया में ओनली 20 करोड़ डीमेट अकाउंट है। टोटल पॉपुलेशन का कितना 13-14% हुआ। यूएस में लगभग 55% डीमेट अकाउंट है। टोटल इंडिया की हाउस होल्ड सेविंग का अभी तक 6.5% पैसा इक्विटी में है। उसके बावजूद भी निफ्टी और सेंसेक्स पिछले 40-45 साल में खाली 820 गुना हुआ है। 100 रुपए वाला सेंसेक्स 82,000 हुआ है। तो आई थिंक अभी तक तो आई थिंक फायर ऑन द सिलेंडर बाकी है। और मैं बोल रहा हूँ कि आप कंपैरेटिव एनालिसिस करो, यूएस मार्केट में पिछले 30 साल का स्टडी देखो और अभी देखो। 30 साल पहले टॉप कंपनीज में टॉप 8 मैन्युफैक्चरिंग होती थी, अभी टॉप 10 में से टॉप 7 टेक एनेबल सिस्टम है, टेक्नोलॉजी एआई है। इंडिया में अभी भी टॉप 10 कंपनीज में टॉप 7 कंपनी बैंकिंग फाइनेंशियल है। सो मेरा ऐसा मानना है कि कहीं ना कहीं कोई ना कोई ऐसा कंपनी आएगी जो टेक एनेबल्ड होके इंडिया की कंट्री को लीड करेगी। तो आई थिंक देयर इज अ लॉन्ग वे टू गो, और अभी तक तो कुछ भी नहीं हुआ है।
अभी चंदन जी ने बताया कि जो क्वांटम के डीमैट अकाउंट्स ओपन हो रहे हैं, जो गति से ओपन हो रहे हैं, दैट इज ऑल्सो वेरी इंपॉर्टेंट। आपको, आपने जब ये इन्वेस्टमेंट चालू किया, आप क्या उम्र के थे? आपको तभी आइडिया था कि ये ऐसा डीमैट अकाउंट होता है, कुछ होता है?
मेरे को तो ये भी नहीं पता था ये लाल बत्ती ऊपर जाती है कि नीचे जाती है, मार्केट चल रहा है कि नहीं चल रहा है, वो हरी बत्ती नीचे जाती है, एरो, ये कुछ समझ में नहीं आता था।
कौन से साल में आपने अपनी पहला स्टॉक खरीदा?
97 में पहला स्टॉक खरीदा था मैंने।
कौन सा था वो?
HFCL, IFCI, प्रिज्म सीमेंट जो मैंने आपको बताया। उसके बाद में महाराष्ट्र टेली कम्युनिकेशन लिया था मैंने, क्या, और जो मैंने महाराष्ट्र टेलीकॉम को बेचा उसके बाद में वो 5 साल वो इंडेक्स में दिखा ही नहीं रेट दिया था।
अगर मैं आपसे एक सवाल पूछूं कि आपका सबसे बेस्ट इन्वेस्टमेंट कौन सा रहा है अपने बिजनेस को ऑब्वियसली छोड़ के, अगर मैं मार्केट की बात करूं, और वो क्यों आपके हिसाब से बेस्ट रहा है?
एक तो मेरे को सुपर सेल्स बहुत अच्छा लगा शेयर मार्केट में, और वो सेल करने के बाद में मतलब मेरे को 4000 मैंने सुपर सेल्स कलेक्ट किए थे। मेरी एवरेज कुछ 110 रुपये की पड़ी थी, और उसको मैंने 370 में बेचा था, और मेरे को 4000 बोनस भी आया उसमें।
अच्छा, मल्टी बैगर हो गया।
मल्टी बैग। तो वो 4000 मैंने रहने दिए, और बाकी जो 4000 मैंने बोनस किए वो निकाल दिए। क्या उस समय मेरे पास एक ग्राहक आया जो CA था, क्या, इत्तेफाक से, अब मेरे को नहीं पता कि ये CA है, तो मैंने उससे बातचीत करी, तो बोले तेरी आवाज़ से ऐसा लग रहा है कि तू खाली शेयर बाजार में इन्वेस्टमेंट करता है। तो उसे एक मेरे को गोल सर्कल बना के दिया, और वैसे उसने 4-5 खंड बना दिए, क्योंकि गोल सेटिंग कर दिए, भाई तेरा गोल्ड में इतना रहना चाहिए, तेरा प्रॉपर्टी में इतना रहना चाहिए, वो हिसाब से तू इन्वेस्टमेंट कर तो तू सक्सेस होगा।
This is what is called asset allocation.
Exactly. Goal-based asset allocation. This is exactly required nowadays.
प्रकाश गावाजी भी आते हैं।
अच्छा।
हाँ, और देवेंद्र चौकसी जी के घर पे भी जाता हूँ मैं।
मेरे को एक चीज बताइए, अभी आपने एसेट एलोकेशन की बात कही, जो अभी सब लोग काफी बोलते हैं कि आपका गोल क्या है उसके हिसाब से आप एलोकेट करो। आपने ये काफी पहले चालू कर दिया एसेट एलोकेशन, करेक्ट? आपका करंट जो पोर्टफोलियो होएगा, मे बी रियल एस्टेट है, कुछ सोना है, चांदी है, इक्विटी है, बिजनेस के लिए कुछ रखते रहेंगे, आपकी स्ट्रैटेजी क्या है? कितना % आपका गोल्ड में रहेगा, कितना %, अगर 100 रुपए है सपोज, तो उसमें से कितना % गोल्ड में रहेगा, कितना इक्विटी में रहेगा?
तो मैंने प्रॉपर्टी बेस किया है, क्या, उसके बाद में मैंने गोल्ड पे बेस किया है, अब धीरे से वापस प्रॉपर्टी और शेयर मार्केट थोड़ा कर दिया हूँ, कम कर दिया हूँ, ज़्यादा नहीं किया हूँ, लेकिन जैसे जैसे न्यूज़ आएगी वैसे वैसे आगे और लूँगा। मैंने गति 24 रुपये में लिया था, गति ट्रांसपोर्ट, और मेरे ग्राहक ऐसे काउंटर पर बोल के क्या मिथलेस आने वाले 13-14 का घोड़ा रहेगा गति, क्या, और गति को मैंने 0 कर दिया, मैंने मतलब 24 रुपये की वैल्यू को मैंने 0 कर दिया। मैंने इतने प्रॉफिट उसमें बनाए, इंटरडे में खेलता था।
ये है तीखी पानी पूरी, एक तीखा मीठा आइडिया जो इन्वेस्टर्स इस दिवाली घर लेके जा सकते हैं।
देखिए, मेरे हिसाब से लर्निंग सबसे बड़ा आइडिया होना चाहिए। हम बोलते हैं इन्वेस्ट करो, पहले अपने आप की लर्निंग में इन्वेस्ट करो, उसके बाद में पैसे बने तो मार्केट में इन्वेस्ट करो। तो मेरे हिसाब से सबसे बड़ा लर्निंग जो हम आप डिस्कस कर रहे हैं, स्टॉक तो हम हमेशा डिस्कस करते रहते हैं, लर्निंग इन्वेस्टमेंट ये करो कि सबसे पहले सीखो। पैसा खुद के नॉलेज से बनता है, बोरोड नॉलेज से पैसा बड़ा नहीं बन सकता है। दूसरा, उतना ही रिस्क लो जितना आपकी कैपेसिटी है। और तीसरा, इंडिया पे भरोसा करो और मार्केट में रहो, वो जरूरी है। इन्होंने जो शेयर रखे, चाहे लेमन ब्रदर क्राइसिस हो गया, दुनिया में कुछ भी होगा, यदि आपने अच्छा स्टॉक लिया और टिके रहे तो लॉन्ग टर्म में पैसा बनाया है, तो पेशेंस भी रखना पड़ेगा। तो ये सारी चीजें कंबाइन करते हो ना तो ही पैसा बनता है। आई थिंक आज का जो डिस्कशन चल रहा है उसके की मैसेजेस यही निकल के आ रहे हैं। तो मेरे हिसाब से खट्टा मीठा आइडिया यही है, स्टे इन्वेस्टेड, दिस मार्केट इज लॉन्ग वे टू गो। मेरे हिसाब से 12 से 15% CAGR रिटर्न तो इंडेक्स दे सकता है, जिस हिसाब से इन्फ्लेशन और
आप 12 से 15%, व्हाट नंबर विल दैट कम टू?
देखो, मैं आपको बताऊं, आप 7 से 8% GDP ग्रोथ समझ लो और 5-6% इन्फ्लेशन समझ लो। और मैं ऐसा नहीं बोलता हूं कि हर साल 12% बढ़ेगा। यदि 2 साल नहीं बढ़ा तो 1 साल 24% बढ़ जाएगा, 3 साल नहीं बढ़ा तो 1 साल 36% बढ़ जाएगा। बट मार्केट की टेंडेंसी ऐसी है और ऐसा ट्रैक रिकॉर्ड भी बोल रहा है। बट यदि आपको अल्फा जनरेट करना है तो आपको पिक करना पड़ेगा कि सेव पूरी लूँ, पानी पूरी लूँ, तीखा लूँ, मीठा लूँ, और वहाँ पे आपको रिसेंट के मार्केट में GST का बूस्ट और कंजम्पशन पे भरोसा करना पड़ेगा।
Basically, what Chandan is saying right now is, you look at the overall consumption theme and the aspects surrounding that consumption theme. ना वो तो हो गया, उन्होंने काफ़ी चीज़ बोली कि हमें मसाला भी चाहिए, पानी पूरी भी चाहिए, चाट भी चाहिए। आप बताइए, आपके पोर्टफोलियो में जो आपने पहले इन्वेस्ट किया था, आपका एक तो पहले आपका फेवरेट चार्ट कौन सा है?
मेरा फेवरेट चाट सेवपुरी है, रगड़ा पेटी से।
कोई भी एक,
दही बटाटा पूरी है,
कोई भी एक, तीनों में से।
नहीं मैं मतलब रोज 3 प्लेट खाता हूँ।
बट सबसे फेवरेट, अगर आपको रोज खाना पड़े तो आप क्या खाओगे?
सेवपुरी खाता हूँ।
तब सेवपुरी खाने में तो आपके पोर्टफोलियो में ऐसा कौन सा स्टॉक था जो आपके लिए सेवपुरी था पहले?
मैं बताया जैसे आपको सुपर सेल्स है।
अच्छा, सुपर सेल्स आपका सेवपुरी रहा है।
लक्ष्मी मशीन सिस्टर कंसल्टिंग कंपनी है क्या, बहुत अच्छा
कंसर्न थी। करेक्ट। मिथिलेश जी की तो सेवपुरी हमें मालूम पड़ गई, वो कौन सा स्टॉक हो सकता है? विच इज योर फेवरेट पानीपुरी स्टॉक?
I feel that the way FI selling has picked up in last few months, despite
multi-year lows.
Yes, you can say that. But I think the focus should be in broader markets. The way it is shaping up, yes, we won't see that kind of up move or momentum as far as Nifty index is concerned. It is going to be a stock pickers market.
I will just pause you here. मिथिलेश जी, आपने कभी सोचा है कि ये फॉरेन इन्वेस्टर्स इतना आके बेच रहे हैं, क्या करें? ऐसी जैसे प्रीतेश बोल रहा है अभी कि FIs मल्टी ईयर लो पे है, सबकी चिंता है, आपको कभी ऐसी चिंता रही है?
मैं नहीं सोचता।
नहीं सोचते कभी भी।
उन्होंने वर्ड कहा था,
क्योंकि
एनालिसिस पैरालिसिस।
हाँ, क्योंकि मेरे को जो एडवाइस दिया है वो मेरे को बोलेगा जब बेचूंगा ना मैं।
हाँ,
वो मेरे से ज्यादा शेयर तो उसने लिए, तो उसको ज्यादा टेंशन है।
So you're saying it's a stock pickers market?
Yes, because I don't think so that we will have the same kind of momentum the Chinese markets are having, or the way US indices are witnessing right now. So I think in the next 1 year, I think broader markets has lots to offer. Yes, Nifty 50 from the basket, few stocks can do well, but the bigger pie, big money would come from the broader markets.
Do you agree with that, Chandan?
Totally agree. मैं तो इनफेक्ट बोलता हूँ 2020 से 2024 was interesting market, and this is exciting market. This is exciting market. You have to be very selective.
And Kush, what would you agree with what they are saying?
In fact, I'll add to something that Chandan mentioned कि 15% का जो CAGR का चंदन बात कर रहे थे, मैं एक इंटरेस्टिंग डेटा पॉइंट बताता हूँ आपको। अगर आप कोविड के लोज से मार्केट के रिटर्न्स, कोविड के लोज से मार्केट का रिटर्न्स देखोगे आज, तो 26% का CAGR है। अब आप कह सकते हो कि भाई चेरी पिकिंग कर रहे हैं, सबसे लो पॉइंट से सबसे हाई पॉइंट पे बता दिया, राइट? मैं कहता हूँ जब कोविड में फॉल आया, उस लेवल से भी अगर आप देखोगे ना, तो भी मार्केट का 15.5% का CAGR रिटर्न है आज। और ये आज के तारीख में क्यों जरूरी है? क्योंकि आज ये जो साल है ये ऐसा जा रहा है जहां पे पिछले अच्छे 4 साल के बाद 1 साल शांति का जा रहा है, और उसमें भी मार्केट 15.5% CAGR के हिसाब से आपको रिटर्न दे रहा है। तो जब एक शांत मार्केट आपको 15.5% के हिसाब से CAGR रिटर्न दे रहा है, तो सोचो जब ये फिर से चलेगा तो क्या होगा।
2025 a year full of IPOs. तभी तो कोई अभी सब्सक्राइब करे कि ना करे।
मैं तो अभी फिलहाल नया इन्वेस्टमेंट नहीं कर रहा हूँ।
नहीं, बट आपकी IPOs पे आपकी क्या राय है? जो नई कंपनी मार्केट में अभी लिस्ट होती है, जैसे LG आया 50% पहले दिन पे, टाटा कैपिटल आया, कुछ नहीं हुआ लिस्टिंग दिन पे। तो कोई कंपनीज है जो ब्लॉकबस्टर लिस्टिंग देती है, कोई कंपनीज है कुछ नहीं देती है, पर लॉन्ग टर्म के लिए काफी अच्छी होती है। आपकी क्या राय है? आप IPOs में इन्वेस्ट करते हो?
IPO में मैं खाली 1-2 पे ही इन्वेस्टमेंट किया था। क्या
एक्सपीरियंस कैसा रहा?
नहीं, मजा नहीं आता।
शेयर लगे नहीं रहेंगे।
This is a great conversation. Thank you so much for joining us on the show. Thank you, Pritesh. Thank you, Chandan. Thank you, Kush. Kush, I forgot to ask you if you can cook well. Pritesh is trying. Chandan said he's a fabulous cook. I think the next show that we are going to do is with both of them cooking for us.
चाट के साथ चाट, something different.
That is something different. But thank you, viewers, so much for watching us on NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
What does Diwali mean for you? Lights, crackers, sweets, parties, family, profit.
Join us this Diwali.
As we add more sparkle to your portfolio.
More punch to your balance sheet and more flavor to your investment. Because this festival of lights is also a festival of growth.
This Diwali, let's ignite your financial journey together.
Wishing you prosperity, success, and light.
From all of us at NDTV Profit. Because we work for your profit.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change. A path to renewal. A leader reimagining her nation's future.
This will be my first official visit to India as the Prime Minister of Sri Lanka. So looking forward to participating in the NDTV World Summit, where I will have the opportunity to engage with global leaders and thinkers.
Catch Sri Lankan Prime Minister Harini Amarasuriya at the NDTV World Summit 2025, 17th to 18th October on the NDTV network. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show. At a time of global uncertainty, when leaders balance risk with resolve, the most definitive leadership conversation unfolds in New Delhi this October. Catch Prime Minister Narendra Modi defining India's moment in history. Harini Amarasuriya, Sri Lanka's Prime Minister, steering the nation from crisis to recovery. Rishi Sunak, the man who reshaped Britain's political narrative. Tony Abbott, bringing clarity to the geopolitics of the Indo-Pacific. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network, bringing the world to India and India to the
Yes, indeed. Two complete men on stage and a lot of complete women and men out there in the audience. Thank you so much, Mr. Singhania, for joining in.
Thank you very much for having me.
Audience and viewers, today we sit down with one of India's most fascinating business leaders. And the reason I say this and say that he's a complete man, because he's transformed a century-old textile legacy into a modern corporate empire. Gautam Singhania has just pulled off a transformative corporate restructuring, splitting a large conglomerate into 3 independent powerhouse businesses, and with more to come, I presume, if I'm not wrong. But he's far from your typical boardroom executive, because he's a man who races supercars at international circuits, founded India's Supercar Club, represents the country on the FIA World Motorsports Council, and owns one of Asia's most enviable automobile collections, from McLarens to Ferraris to Lamborghinis and more. Should we start with cars, Mr. Singhania?
Whatever you like. Thank you. That was a very kind introduction.
No, not at all. But I want to try and get your perspective on how do you combine what the opportunity that Raymond has as a group with the opportunity that India currently presents, and for you, presumably the world presents as well.
So as you know, Raymond is probably the only company in the world that sells for 3,000 times in price point. We go from 300 rupees a meter to 10 lakh rupees a meter under the same brand. And there's no brand in the world that can do this. Nokia had to do Vertu, Toyota did Lexus, Ritz did Four Seasons. And as a company, and we were talking earlier, you said we are in the luxury space. No, we're not. We're in the belly of the market. 99% of our business is in the belly of the market. So if you take lifestyle, this is the India. I mean, everybody grows up and gets married in a Raymond suit. And you're right, we turned 100 years old a month and 5 weeks ago. So we're probably one of the only consumer brands in India that have survived 100 years. So we're very proud of that, and we're proud of that because the Indian consumer has a lot of trust and belief in Raymond. If you take real estate, you were talking about real estate being luxury. For us, we operate in the affordable luxury segment. And I always say, whether you take lifestyle, fashion, clothing, whilst you say you're in the fashion business, Armani and us are in 2 different businesses, whilst we both make clothes. Loda and us are in 2 different businesses in the real estate space. They're in a completely different market with them and Oberoi, and we are in a completely different business. Whilst we're both into real estate, we're both in 2 totally different businesses. And when you start looking at it like that, you get different answers.
Yeah. So, okay, tell us about this opportunity, therefore, that comes in, because there's a clear pivot, or if not a pivot, a push towards consumption in addition to the Capex push that India has had. I'm loosely bucketing into 2, right? Where does Raymond see opportunity both on the India scale and the global scale, particularly as India stamps its dominance on the world stage?
So firstly, let me flag it. Let me say more than 90% of our business is now going to be in India. And as the middle class grows, as the aspiration of the middle class grows, whether it's in the fabric space or whether it's in everybody wants a home. I mean, a 2 to 3 crore rupee home in Bombay is affordable luxury. Everybody wants that. If you take the global space, today there's a gravitas to wanting to manufacture in India. With the Make in India, which Modi ji has done, he's taking momentum. You see the Google announcement in Vizag. Today there was another big announcement. You're slowly going to see that happening. Now, the engineering company that we bought, there's a huge interest in aerospace and defense wanting to invest in India. I mean, I think we've got more than our hands full of the opportunities. Now, it's really a question of how you can convert that opportunity into reality. Will it happen? The answer is yes. How long will it take? It's anybody's guess. So I'm very, very bullish on the international opportunity towards India. You've got the disruptive things like Trump, which is very controversial. I don't want to comment on that because that's a whole day's discussion. But as consciously as a company, we have taken the decision that we don't want to operate in the US. And I'm sorry I'm making a very controversial statement, but if companies like us start feeling that this is causing too much uncertainty and disruption, and we don't want to deal with that uncertainty, I'm sure there are hundreds of companies in the world that are thinking, and then we've got to understand what's the long-term fallout of that.
Interesting. But from what you said, if you've taken this conscious decision of 90% business in India, you believe that for all the facets of your business, which is textiles and lifestyle to real estate, to the engineering, aerospace, defense business, all of them give you enough opportunity to grow at the pace that you want the group to grow?
Well, real estate grew at 46% last year. Where in the world will you see a 46% growth? Okay, I'll bet we grew it from a lower base, but we still grew 46%. Lifestyle is growing today. You've got the legacy business of the fabrics. You've got, now, do I want to go up and set up 10 shops in the UK? I don't want to do it because it's going to divert management attention. It may look, sexy to be in the UK and US, but it's not going to pay you. We've got so many new verticals, whether it's ethnic wear, sleepwear, innerwear, and each one can become large. So India is the land of opportunities. I mean, if you had $100 today and you say, I wanted to invest, where would you invest? If I had a choice to live anywhere in the world, I want to live in this country because this is the land of opportunities. I mean, if you go to UK today, it's horrible. Nobody wants to be there. And, you know, manifestation of that, you saw the UK Prime Minister who came, but you saw the size of delegation that came with him because they are all looking at the opportunity in India.
Most certainly. So tell us a bit about this opportunity as well. Do you sense, I mean, what is different about the opportunity that India presents right now in this decade versus what you may have seen over the last 20, 25 years?
I think it's the emergence of the middle class. You know, there's an aspiration. Every middle class individual has an aspiration to want more. And when goods and services are available, so let's take real estate, you know, when there were no good quality affordable housing in the market, there was no demand. But suddenly when you put the product in there, we've sold over 5,000 apartments today in 5 years. And this is only exponentially growing. We started with our legacy land. Today we've got 7 JDAs. And a lot of you are from Delhi, but I don't think you understand. In Bombay, in my opinion, and I could be wrong by a couple of hundred million or billion, but it's a $2 trillion opportunity. Just Bombay for real estate development. Look at the amount of money they're putting into infrastructure with the coastal road, airport, metros, Atal Setu, and now a lot more. So there is huge opportunity. It's just you got to grab it.
And you are, of course, grabbing it by being present in the textile business that you've been for all your life. And by the way, I don't know how many in the audience remember the Raymond ads, but they used to be my favorite ads. Silent ads, a small piano playing in the background, but they were just refreshing to see because they were not noise, they were just class. And I believe that embodies the products that you gave. But just coming in on that, Mr. Singhania, what opportunities do you see in non-real estate? Because the lesser known part of your business is this whole engineering defense part of your business. And here you are telling me that while that is a global business, you want to do 90% of that in India.
No, so I'll only say in the engineering business, we're in 3 parts. One is engineering files, which is our legacy business, auto components, and aerospace and defense. Auto components, we're significantly focused outbound, but again, reduction on America. We want to reduce in America, look more at Europe. You'll still get the same customers. Aerospace, defense, whilst there's an outward opportunity, there's also an opportunity within the Indian government. And if you can bring new technologies, forward-thinking products, and we're working on a host of products that, you know, I couldn't even spell 1 year ago, but I mean, I was sitting with a company yesterday talking about unmanned overwater drones, underwater drones. There's so much stuff going on. You know, the other way of looking at it is the Russia-Ukraine war has thrown up opportunities of new technology, which is coming. So, of course, the domestic market is going to be a big opportunity as well.
And when you talk to a lot of these global companies, whether in your traditional businesses or the new businesses, is there a desire to do business in India in a big way? I know there is this bit of a tariff unresolved issue between India and the US, but are companies really wanting to...
I think it's more than you and me can even dream of.
Sorry, come again?
It's more than you and me can ever dream of. The amount I'm seeing global companies wanting to come and participate in India on the manufacturing side, and I don't know if you saw, we signed an agreement with the Andhra government, with Naiduji to do large-scale manufacturing there. I think literally on a weekly basis, we're getting a call for manufacturing in India. That's something it's unheard of.
Very interesting. Okay, from business to the other things, right? And I couldn't let you go without talking about cars. I'm sure a lot of car enthusiasts out here. And, you know, everybody's trying to figure out what is it that we look for in the next car, the features, etc. Now, you have the finest cars that anybody can think of having. When you are looking out to go and buying your next car, what is it that you look out for in the car?
It really depends on what I'm looking for. I mean, am I looking for a vintage? Am I looking for a classic? Am I looking for something that I don't have? In the vintage world, there's so many cars that are there. I genuinely believe, I've also got a restoration shop. We're the best restoration shop in the world today. We can restore a car fastest in the world. We're bringing history back to life. I mean, so let's talk vintages, we'll come to supercar. And that is a finite supply. Now, let's not look 1 or 2 years from today, but let's look, say, 50 years from today. I've got many brands that are lost in history. And they're only going to, there's a preservation of history that goes on there. If you take today, I've got a 1903 miniature Velox, only one surviving in the world. You can start it on the first shot, it works. There's a passion with it. I've got a 21501 Corsa Fiat, original from 1921, with the original seats. Now you think the passion that's associated, it's got the stickers of all the milli-millias that it's done. Now that's a different world. When you look at supercars, it really depends what's out there. There are very few brands that make great supercars today. But I don't think they're launching models that fast. I genuinely believe that the supply chain for supercars is broken. Today, they commit you a car that's coming out and it takes years before it's coming. It's not months, it's years. Say the top marks have launched a car, you get the delivery 2 or 3 years after they have launched it. So the market is very, very different and changing.
What time do you drive these cars, by the way, in Mumbai? It's chock-a-block right outside your house. So what time do you go out and drive?
Fortunately, within 400 meters, I can hit the coastal road and be on that. So driving in Bombay has actually become a fantastic pleasure. But ideally, I drive at about 7 in the morning or on the weekend or late at night. Okay. That's when you can enjoy the cars.
Do you like an electric vehicle? A lot of people...
I don't think about them.
You don't think about that. You like internal combustion engine, the vroom of the car should come.
I think EV has been politically hyped. Today, EV production must be about 3% of IC. I think that 3 million EVs being made in the world against 100 million ICs, something like that. So, yeah, I mean, it's okay. It's a toy. I had a battery-operated car when I was 4 years old. So why are we talking about EV today? My little go-kart was EV.
Okay, that's an interesting comparison. Tell us a bit about the Supercar Club, because I mean, also I might be mixing an apple and an orange here, but you know, I remember back in my college days, F1 was really big. I don't know if it's still as big, and cars are not as big a deal as in racing cars, motorsport. Maybe I'm wrong, but at least in my circle, it is not as big a deal as it used to be in the past. Am I correct? No.
So you're talking about the Supercar Club. The Supercar Club was formed in 2008. I used to find when I used to take my car out, everybody used to like to look. And I genuinely believe that, you know, exposure creates demand, exposure creates motivation to buy. And that's how the Supercar Club was formed. It was a group of people who enjoyed cars, who talked cars. It's like any special interest group. And I think over the last 17, 18 years, it's grown into a very large club. We had our last event this year, and I was shocked. I mean, we had 250,000 people that came to the show. We had 69,000 reposts on Instagram. And I think we got something like 500-600 million views on the event. But every kid was there with, because it was open to the public, every kid was there with his camera. And I can guarantee you every kid there was saying that when I grow up, I want to buy a Ferrari. I want to buy a Lamborghini, I want to buy an Aston. And that exposure creates motivation. You know, I saw my first Lamborghini when I was 9 years old, and I still remember where I saw it. And I said, one day when I grow up and make my money, I'm going to buy a Lamborghini. And these things become very, very motivational. I mean, it was really funny, I shouldn't say that, but we had the chief minister, and I bought a rickshaw there for him, and chief minister was driving the rickshaw. And it was really nice to see the Chief Minister drive the rickshaw. Not Mr. Fadnavis, Deputy Chief Minister, I'm talking about Mr. Shinde. So cars bring people back to their roots and what they like. So it's great fun to get the like-minded people out there together.
Yeah, most certainly. But I still have the part two of my question, which is that I'm guessing you're a car enthusiast. You must be a motorsport enthusiast.
I am.
Do you think India's scaling up on the motorsport world scale is kind of coming off a bit, or do you think there is room to go?
The problem is, if you want to be on the global scale for motorsport, you should have a country that's got an ecosystem for the sport. For example, India's got an ecosystem for cricket. We play cricket in the gullies, it's part of lifestyle. Motorsport is not practiced here. Today, we probably got 5 license holders from India. UK's got 70,000 license holders. So the whole grassroots system, if you take Naren Karthikeyan, Jehan Darwala, Kushmani, all have had to go to live in the UK ecosystem to develop. My daughter is an equestrian rider. She lives in Belgium because the ecosystem for riding is there. The ecosystem is not here. So you have to be part of that ecosystem to survive. It's not that I can go racing every weekend in this country. I can go racing every weekend in the UK, whether it's the UK, whether it's the continent, wherever it is.
Well noted, Mr. Singhania. But on that note, we hope that the new Samvat ushers in a lot more for a lot of businesses you are doing, for the country and maybe for motorsport as well. But thank you so much for joining in on this August gathering and sharing your views. Really appreciate it.
Thank you.
A round of applause for Mr. Gautam Singhania of the Raymond Group.
What does Diwali mean for you? Lights, crackers, sweets, parties, family, profit.
Join us this Diwali
As we add more sparkle to your portfolio.
more punch to your balance sheet, and more flavor to your investment. Because this festival of lights is also a festival of growth.
This Diwali, let's ignite your financial journey together.
Wishing you prosperity, success, and light.
From all of us at NDTV Profit. Because we work for your profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys are
Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. And first up, let's see how the markets have fared today. So benchmarks outperformed broader indices, gaining for the third consecutive week. Nifty gains over 1.4% for the week, which is the best gaining sector for the week. All sectors, indices, have ended on a mixed note. Nifty PSU Bank and Nifty IT has snapped 2-week gaining streak. But for more, let me just go across to my colleague Puneet. Puneet, what are you making up, of the markets? How have they fared today, and what is it looking like for the week?
Well, what a week it has been for the markets, because we have seen the Nifty 50 end at a record high, so has the Nifty Bank. But first, let's talk about the Nifty 50. Above 25,700 for this particular week. It's been a stellar session over the last 2 to 3 days, with continuous momentum being ramped up each and every day till Friday. While we go into Dussehra tomorrow, we have seen the Nifty 50 inch up from those 25,200 levels at the start of this week, all the way up to 25,700 levels. For today, we saw stocks like Asian Paints, which has been one of the key laggards of this year, starting to see a positive momentum. It was up over 4% in trade today. The other ones also, like Mahindra & Mahindra, was the other top Nifty gainer for today's session as well. It's closed about the 25,700 mark, but has been gaining consistently for the last 3 days. When you look at the other aspect, that while the benchmark indices continue to perform well over the last couple of days, it is the broader markets that's starting to see some pressure, with all of these indices not performing well. Individual stocks, while have been hovering in terms of news flows, we have seen the larger broader markets continue to be in pain by the end of the week. When you look at the other aspects, the Nifty 150, the mid-cap 150 actually closed in the red, with stocks such as JSW Infra as well as Yes Bank fell the most in that particular index, while the small cap 250 as well closed in the red, with Sterling and Wilson as well as Credit Action Grameen was the other stocks that was impacted in trade today. When you look at the other sectoral index, the Nifty FMCG, led by Asian Paints, was one of the biggest gainers today, and it has been that the consumption pattern, while has been in focus, you weren't seeing that reflection in a lot of those individual plays, and now that has started to happen. Amongst others, we did see that the Nifty IT was the top Nifty losers. You are seeing that reaction on Wipro as well as Infosys post quarterly earnings, but the results were largely decent. But it's what anticipation of H2 is what hampered on the stock today. Going into next week, we have the Mohra trading session on the 21st, but largely a week where the festivities will be galling. But in terms of the Nifty 50, we are going to be starting at a crucial level of 25,700 level. That's eluded us the most, but that'll be something to watch out for.
Absolutely, Puneet. Thank you so much for that. And with that, viewers, we'll have to slip into a short break. But please don't go anywhere, as we have KYC on the other side of the break.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
this Diwali mean for you? Lights, crackers, sweets, parties, family, profit.
Join us this Diwali
As we add more sparkle to your portfolio.
more punch to your balance sheet, and more flavor to your investment. Because this festival of lights is also a festival of growth.
This Diwali, let's ignite your financial journey together.
Wishing you prosperity, success, and light.
From all of us at NDTV Profit. Because we work for your profit.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language.
Happy Diwali to all the viewers in advance, and this is the time when we do know your company. I am Hiral Datia, with me is Varsha Chandani. What's interesting is today we're going to talk about a company which has been slightly under pressure right now, and that the main reason for that is the pricing pressure that the sector is facing. Yes, we're talking about a company from the chemical space. Rosary Biotech, that's the company that we're talking about. Let's first understand, what do we want to know from the management? First up, what is the pricing pressure looking like now? Is it easing or not? And will they see the volume growth back in action? That's the first aspect. Moving on, what is the target looking like when it comes to EBITDA break-even, specifically in the institutional business, because the margins are something that we need to watch out for, Varsha.
Also, Hiral, I would want to know how's the outlook when it comes to their export business, because Q1 saw some subdued demand, but they are back with growth when it comes to Q2. What's the outlook ahead? Will they sustain this growth? Then I would also want to know, is company seeing an improvement in margins, because we all know what chemical industry is being going through, and that is evident from their pressure in margin. So outlook on margin. And lastly, what are their expansion plans and how these expansion plans will be funded?
Interesting questions for us to ask the management, but first up, let's quickly look at all that we know about the company. Rosary Biotech is in the manufacturing of specialty chemicals in India. When you talk about their three main product categories, you're talking of home personal care and performance chemicals. That's the HPPC category, as we call it. Textile specialty chemicals, that's the TSH. And you're talking about animal health and nutrition. These are the three segments that the company caters to. And from the three, HPPC, that's the one which contributes majority. 78% of the contribution in terms of revenues comes from there. And then it's TSC which contributes the remainder. Animal health is around 5% right now.
And I would also want to pull up the chart when it comes to their export business as well, because if you see, that contributes 28% to the overall revenue, and exports have increased year on year, and we would want to know what is the expected contribution over the next few years that the management want to take. So onto the geographical contribution, 72% comes from domestic, while almost 28% comes from export. So where this number management want to take to, because this is a high margin segment, so we would want to know on the export side also.
Okay, with that, Q2 earnings probably give you some bit of a trend, right? The revenue that has come in from the volume growth, which is a key positive that we need to watch out for. In terms of the three segments, 16%, 21%, 29%. That's the kind of growth that they've seen. And what's interesting is animal health has seen the maximum growth that has come in there. The profits have been steady as well, but that's only on the back of subdued pricing and ongoing investments. When you talk about the institutional and B2C performance, we have seen growth that has come in the institutional business as well, but B2C business has remained muted in this quarter. The losses, in fact, have narrowed on a sequential basis, so which is a positive for the company as well from here on.
And also the capacity expansion plans, let's pull up that also, what company is doing. They've commissioned additional 20,000 metric tons per annum at Dahej, and also the total capacity now, if you see, stand at around 1,52,000 odd metric tons per annum. And their phase 2, rather the unit of which they also started 15,000 metric tons per annum of ethoxylation capacity at Unitop, which they acquired in 2021. And all this expansion out of which the phase 2 will be commissioned by 23, and all this expansion, if you see, will lead growth when it comes to their personal care, agrochemicals and pharma. And also board has also approved almost $8 million of investment when it comes to their Saudi subsidiary as well.
Okay, interesting commentary here from expansion as well, Varsha. But let's tell our viewers all our rating parameters that we are considering over here. First up, you're looking at the income statement check, balance sheet, cash flow, return ratios is what we will consider. Street credentials, valuations. Along with that, when you're talking about street coverage, the outlook also becomes absolutely important. So with this company, we're going to look at the outlook that the management has indicated so far. But first up, let's decode the income statement. Now, if you have to look at the last couple of years from FY18 to FY25, it's reflecting a company which has been in a significant expansion and integration phase. Now, the company has successfully scaled its revenue manifold, which establishes a larger and more diversified presence in the specialty chemicals market. The challenge being that the expansion has come in at the cost of margin compression. The key for future, analysis will be the company's ability to drive this margin recovery through operating efficiencies, product mix optimization. I mean, they will have to look at higher margin offerings as well, and the synergies that could be coming in from the acquisitions. Now, the moderate growth that we've seen in the net profit in FY25 compared to the revenue growth, also indicating that the cost management and margin expansion remains critical focus areas for the company. And pricing pressure has been a concern. They've actually gone ahead and said that the growth has been trimmed over the last 2 years as well. And to add to this, the key will be when do they actually see that pricing coming back, and the way volumes have increased this time around, will they see it going further from here on, and hence a neutral rating on the income statement?
Well, talking about balance sheet, not much surprise here, because though if you see the, borrowing has gone up from 74 crore to 188 crore, but this is well within the limits, so not much surprise when it comes to borrowings. Even cash in bank, if you see, was 124 crore in FY23, fast forward to FY25, stand at around 57 crore. But overall, a thumbs up when it comes to a balance sheet, because if you see, debt to equity ratio also is well within the limits, so not much aggressive debt that the company has taken. So overall, a thumbs up when it comes to balance sheet.
Okay, so that's with regards to where the balance sheet goes. Now, let's understand the cash flow statement as well. Now, overall, you will not see any major issues coming in here. But if you're talking about FY24, the cash flow from operations was lower, but that was mainly on the back of the increase that the company has seen from the receivable front, which has actually impacted the cash flow from operations. And on top of that, the company also made an investment. So your net cash flow is seeming to be negative in FY24. But from there on, if you talk about a net cash flow of almost 19 crores, this is on the back of the investment of almost 183 crores that they have made, out of which majority has been in fixed assets worth 159 crores. And hence, we've given it a thumbs up so far, Varsha.
Right. And on to ratios, let's pull up that chart, how return ratios have been fed for the company. So in FY22, the ROC, that is return on capital employed, was almost 24%. Fast forward to FY25 is at 17%. Even if you see ROE, that is return on equity also, there also if you see that this from 16% to 12%. So yes, we have seen return ratios going down. Now why? Because of the acquisition and inorganic expansion that Rossari Biotech has done with respect to Unitop and Tristar Intermediates also. So while these acquisition, if you see, has boosted their HPPC revenue, but they have initially dragged their return ratios, and hence we are seeing the drag in the return ratios. And overall, if you see the pressure in the margins and overall the profitability pressure has also impacted the return ratios for the company, and hence we've given a neutral rating on the ROC and ROE front.
Okay, let's look at the shareholding pattern. Again, a neutral rating from NDTV Profit. Now, the only reason being is, if you talk about the promoters, they've remained steady. Your DIIs, again, that 70 to 18% is the kind of range where they have maintained in the last 3 years. Public has gone up marginally, but your FIs have actually seen a dip. It's nearly halved from a 4% to a 2.7%, or at least 1/3 of it has gone away. And that's the reason why we've given it a neutral rating.
Talking about the street cred, the investors have actually not made money in the last 3 to 4 years when it comes to Rossari. If you see in last 1 month, the stock has given only 5% of return, while in the last 6 months it's down 1.3%. In year to date, the stock is down 15%. Even in the last 5 years, the stock is down almost 13%. So now one of the reasons is, of course, because of the industry dynamics that the company has facing. We have seen chemical industry as a whole facing problems when it comes to realization, when it comes to pricing pressure, though volume has increased. Now we are seeing that growth in volume coming back, but China destocking and China dumping has always been the issues when it comes to chemical industry, of course, in the last 2 years, and hence we are seeing the investors have not made money when it comes to Rossari, and hence we have given a downward rating when it comes to street cred.
Okay, let's look at what valuations are telling. It's interesting because if you have to compare, to a 3-year average, it seems very reasonable. If you compare to the peers, it's slightly somewhere in between. The reason why we've given it a neutral rating is because the expectation is of a volume uptick. And if the pricing pressure eases, these are the two aspects that analysts are, actually taking into consideration. If pricing pressure eases, please hear that carefully, because that is what probably is the reason why you're seeing a good upside, which the analysts have given the counter as well. And that's the reason why we're talking about a neutral rating so far.
Well, talking about the analyst recommendation, as you rightly said, on that upside potential, you have 25% of upside potential, what analysts are pegging in, with 6 calls of buy recommendation, hold 0 and sell 0. But as Hirul was saying, this is on the back of if pricing pressure eases. Now, talking about the outlook, when it comes to Rossari, their new capacity, EO capacity and backward integration will actually cut cost, and the expansion at the Unitop and Tristar will actually add high growth chemical segment into the picture, and their Southeast Asia facility will boost exports for the company. So there, we might see that growth to be sustainable over the next few years, and the innovation pipeline will actually support long-term growth, and hence, on the overall rating, if you see, when it comes to analyst recommendation and outlook, we have given a thumbs up onto that.
Okay, so that's with regards to where the overall ratings go, but let's understand what that actually adds up to from the rating parameters. A neutral when you talk about income statement and return ratios, but your balance sheet and cash flow are a thumbs up. your shareholding valuation, street coverage and outlook is a neutral, and your street creds is a thumbs down, and that takes you to a 5 on 8, which is still a pretty strong rating, I would say, on KYC that's come in. But to discuss further on this and what is in store, let's get in Ketan Sablok, Group CFO at Rosary Biotech. Ketan, welcome to the show, and always a pleasure to speak to you. Wishing you a happy Diwali as well from NDTV. My first question coming to you is, we've laid down what's happened in the past couple of years. There is some bit of respite that's coming in on the volume front in the second quarter of FY26. What is the trend that you are looking at if you have to look at the next couple of quarters from volume and pricing perspective?
So yeah, thank you for having me, and happy Diwali to the entire team there. So this quarter, I think whatever growth that we've been able to do, most of it has come through volume. Pricing is a challenge for us. It's a little dynamic situation now. Going forward, also we do not have a complete clarity on how the end market is going to behave. We have issues of tariff, etc. But we're just keeping our fingers crossed that we can keep pushing the volumes. Some of our capacities, as we had said, have come on stream. Couple of new capacities will come during the forthcoming quarters. And then our target will be over the next year, 2 years to start utilizing these capacities completely. So most of the growth, as we see today, should be volume-led. Pricing is a challenge for us as of now, the way we see it, sitting today.
Note, Mr. Sablo, hi, this is Varsha, this side. Welcome to NDTV Profit. You have guided for mid double-digit growth when it comes to revenue and profit in FY26. Considering the pricing pressure that you have and considering the on-ground reality, are you still track when it comes to this guidance, or do you want to upgrade it?
No, we would not like to upgrade the guidance. We had talked about 12 to 15% kind of growth during this year. The first quarter was slightly lower, but I think on a H1 basis, we are again back on track, close to 14% growth on the top line. And we envisage that by the end of the year, we should be at the levels of 12 to 14%, coming on the back of a lot of these geopolitical situations that are happening, tariff issues, etc. Some of the demand could taper down in the coming quarters, subject to how the tariff situation folds out. But yes, as of now, we would still stick to what we had guided earlier.
And what about margins, Mr. Sablok? Where do you want to? Where do you see EBITDA margins for FY26?
So I think FY26 we had guided for margins EBITDAs about 12 to 13%. I think as of now we would still stick to that kind of margins.
Understood. Also, Mr. Sablok, talking about your exports. So in Q1, there was a dip in exports, but in Q2, the exports grew very strong. What is the trajectory going ahead when it comes to export? Do you see this growth sustainable when it comes to the H2 FY26 and for FY27 as well?
Yes, so we've always been talking about our growth coming majorly out of exports. The exports going to outperform the domestic sales, and I think that's how the situation is currently playing out. This quarter was very strong for exports. Almost 30% of the overall revenues came out of exports. Exports grew by close to 36% in this quarter. And I think we are very confident to maintain this split of 28-72% kind of split, at least for this year. But having said that, we are seeing a short order flows are getting a little difficult from the export market, especially because the end customers are not very clear on when to order and the exact timing of the order. But we are still confident that we'll be able to track that. We've done. We are expecting the Southeast Asian, the Thailand plant of ours to come on stream by the end of Q3. So that's also going to help us, especially to start with in our textile exports to the Southeast Asian markets and Bangladesh and some of the other countries. Where the tariff could be an issue while exporting from India. So that should help us cushion some of the export demand, which could be lower on the Indian market. So I think we still hold on to this 70-30 split, and we expect exports to keep growing.
Okay. Ketan, you interestingly said that the 70-30 kind of split is what will continue for exports this year. Let's look at the next 3 years. How much do you plan to scale it up to, number one? Because this is something which is usually a margin accretive side of the business. So are you seeing any tailwinds then coming?
Yes, so if the plans come out the way we've laid down within the company, and some of these issues in terms of duties, etc., get rectified, I think this split is going to grow in favor of exports in the next couple of years. That's what that's how we have planned out our next move. Some of the initiatives that we've taken in terms of growing the export market, we've seen some of that playing out this year. More of it will play out in the forthcoming years also.
Mr. Sablok, on to the institutional business. You've seen losses, when it comes to institutional business. When are you expecting that EBITDA break even, and what's the outlook when it comes to this side of segment?
So if you see this quarter, the losses have come down quarter on quarter. But yes, this business needs to grow to a certain size before it becomes an EBITDA neutral and a little bit of EBITDA positive. Our internal targets are that over the next 2 years, this business should become a larger pie with at least 500 crores kind of a top line revenue, and around that revenue we expect this business to become EBITDA positive, add some bit of EBITDA margins to the overall business, because that's when all the cost leverages will flow in. So we'll hold on to this business. We see a lot of value in this business. So in spite of this making losses in the last couple of quarters, we still are very, very positive on this.
Okay, when does it get back into the black, number one? And two, raw material price trends, how are they panning out? What's the outlook looking like?
So this, as I said, this business becomes black when we reach the top line of about 500 odd crores. That should happen the next 1.5 to 2 years. On the raw material front, I think raw material prices are stable now. We're not seeing too much of a movement on the raw material front. And that's helping us hold on to the prices. While we're not getting any price increase, but we've been able to hold on to our selling margins also.
Okay. When it comes to your capital allocation and debt as well, I mean, your recent Capex has been the hedge, the Unitop expansions, that's what we're talking about. This does lead to rising interest expenses. What's the outlook when it comes to the debt levels and the interest coverage ratio for FY26? And two, the projected return on capital employed and ROE as the new capacities start contributing meaningfully?
Yeah, so our expectation is that these new capacities will start contributing meaningfully by FY28. So that's when, the peak utilization of these capacities will come through. We still need, typically chemical plants need about 2 years to peak out on their capacities. And once that happens, I think all these ratios in terms of ROEs, ROCs will start showing up. These are good products. These are high capacity, high utilization capexes. The asset turns are going to be significantly high, so it will be all in 4+ kind of asset turns. So our expectation is that by FY28 we'll be able to peak out on these capacities in terms of volumes.
So Ketan, would you peak out on your return ratios as well? We've seen the 22% number versus a 17 in FY22. So on your return ratios, when do you peak out? Are you saying once the capacities are at full utilization, you will see those peak numbers on your returns?
Yes. So FY28 onwards, we should see a better return ratios.
Right. Lastly, I just wanted to ask about that. You said that the growth will be driven by volume, at least in the short term. What kind of volume growth you are expecting? Any ballpark range, if you could give us?
So volume growth, we expect at least 12 to 15% kind of volume growth in the short term. These capacities, once they start, partially contributing over the next year and 2 years, I think the volume growth will be very visible in our top line numbers.
Right. Well, thank you, Mr. Sablok, for answering all the questions, and all the best for the business, and happy Diwali.
Thank you, and happy Diwali to you.
So, the key takeaways, Hiral, from this interview would be: one is they're expecting 14 to 15% of revenue growth for FY26 with EBITDA margin of 12 to 13%. And they are also expecting their Southeast Asian plan to be live from Q3, which will actually drive exports for the company. And lastly, a kind of, so there's the tariff situation may actually, impact demand in coming quarters. So that
and your return ratios will peak in FY28, yes, when all your capacities will hit maximum utilization. That's the key from here on. But completely out of time. That's all, folks, that we have on KYC. Thanks for tuning in only on NDTV Profit for your profit. Lots more lined up on the other side. Please stay tuned for a blockbuster Diwali coverage on NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely. You can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
What does Diwali mean for you? Lights, crackers, sweets, parties, family, profit.
Join us this Diwali
as we add more sparkle to your portfolio,
more punch to your balance sheet, and more flavor to your investment. Because this festival of lights is also a festival of growth.
This Diwali, let's ignite your financial journey together.
Wishing you prosperity, success, and light.
From all of us at NDTV Profit. Because we work for your profit.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit. A story of change, a path to renewal.
Hi, thanks so much for joining in. You're watching MoneyWise on NDTV Profit, and my name is Alex Matthew. It is around Dhanteras, so let me start by wishing you and your families a very happy Dhanteras. And ordinarily around this time, we speak about investments in gold and silver, physical assets. But today I'd like to take a little bit of a different stance, not because gold and silver are as expensive as they are today, but because perhaps it's now time for you to widen the ambit. Perhaps it's now time for you to look at art as an investment. But how do you value art? Should you look at Indian art differently from what you would in, say, the Louvre in Europe? And why is it that art appreciates after the painter or the artist passes away? If you are looking to create a career as an artist, what do you bear in mind? I'd like to cover some of these aspects on today's episode. Joining me today is an accomplished artist and a curator of art, Mittu Basu. And I've also got Ketan Karani, who has been speaking to us about the stock market for years, but he has, over the last several years, been an art collector and a proponent of Indian art. So the perfect panel, I think, to talk about some of these aspects. Let me start with you, sir, because I think to lay the context, today the conversation I want to do is more about art as an investment, so my viewers will perhaps need to have a sense of the landscape. How do you describe Indian art as a landscape when you compare it with the global landscape?
So if you look at Indian art, the only way we can describe it is that it's deeply undervalued and underrepresented on a global scale. If you have seen some of the prizes of Hussain sir, Raza sir, Souza ji, Vasudev Gaitunde ji, The prices have certainly shown some appreciation, and some of them are quoting at lifetime highs. But if you look at contemporary art in Western world or new artists in Western world, they sell for like $10 and $15 million. The masters like Vasudev Gaitonde, Hussain Ji, Tayyab Mehta, Souza, Raza, if you have comparative artists in Western world, they sell for $100 million plus, $50 to $100 million plus.
Wow.
So if you miss, this is Indian art is deeply undervalued, deeply underrepresented, and deeply underowned. So the line for growth for Indian art is huge if you compare a 10-20 year horizon.
Yeah.
And the underrepresentation on a global scale is primarily because people don't know who Indian artists are, who Indian masters are.
Okay.
It is very important and pertinent that we, as you are doing a show, that people realize that this type of investment is a huge wealth creator also.
We'll come back to that. I want you to weigh in on this. As an Indian artist, as somebody that paints prolifically, you have so many, and I know for a fact that you have canvases lying at home that nobody has probably ever seen. And so therefore, the question to you, as an artist in India, do you agree with what Ketan is saying?
I look at it as a virgin landscape that is absolutely on the threshold of sparking off. And I see this as a great opportunity. Like, to do an analogy, they said, someone had to go and sell slippers and said, there's no feet.
Yeah.
And you know that analogy. And then someone saw it as an opportunity that everyone needs a slipper here. So if that is the case, if that's a reality, because he's in the market and he is saying that, we have to agree, because we are really underrepresented. And we do have very few. Imagine a population like ours having 5, 6, 10, not even a full hand of artists who are known. It is a sad reality. And I think this discussion that we are going to be having now is so pertinent and so timely because we need the big players like the corporates to come in and to invest. And we have to make it attractive.
Okay.
So we'll talk about it.
We'll talk about that. But there is also the factor of artists that have passed away that are valued always more. And I mean, there are famous stories about Van Gogh. There are famous stories, of course, about Hussein and various other artists. Why is that? Is it because there was a certain recognition while the artist was alive? Maybe, maybe not. But certainly after it was discovered, there is no possibility of there being more supply. And so because there's limited supply, the value just shoots up.
I agree with you, because your question itself has an answer.
Sure.
Because if you look at Vasudev Gaitonde, who is considered one of the greatest artists, or Hussain sir, when Vasudev Gaitonde expired, he did not have much art left with him. In fact, when he was painting also, Vasudevji used to paint 5, 6, 7 artworks in a year max. You mentioned Van Gogh. Van Gogh, during his lifetime, sold only one painting in his life.
Yeah.
And that too to his brother Theo. After his death, Theo's wife took upon her to market or provide the world how Van Gogh painted and what his paintings are. And to come to the question where the artist expires and then so the maturity of an artist generally happens between 45 to 65 years of age, when his art really flourishes from that point of view. And once he is no more due to reasons of death, we are all die one day. So when he's not there, the supply becomes rare, impossible to have, is zero. And then people start discovering the artist. And that is when the discovery happens. People start reading about his life. People start reading about his stories, what he was. If you look at Vasudev Gaitonde, because I love so if you look at Gaitonde ji or Hussain ji, they may have their own controversies, but they have bigger canvas of global things. Vasudev Gaitonde drew his inspiration from Kandinsky. Barve sir drew his inspiration from Paul Klee. Hussain sir was called the Picasso of India.
Sure. So talking about discoverability of artists, we're at the Pula Deshpande Maharashtra Art Academy, and this is one of the foremost displays of arts that you might have in the center of the city. Of course, there are galleries in a large number of places in Maharashtra, in the rest of the country as well. But this is quite the display of art around us. You are a curator of art as well, and you facilitate the displaying of art. Talk about that aspect, because you said marketability is important. People should be able to view art in order to buy it, in order to purchase it. Do you think that that is at a very nascent stage in India?
See, at the end of the day, we really can't put our finger on a pulse on this. I'll tell you why. Because I always felt that artists normally pay for a certain space. And because they paid for that space, they want to crowd it.
Sure.
And that's not the way to see, because we need negative space to appreciate art, to visualize it in our homes and things like that. But when I went to Vietnam or I went to Bali, I saw art being stacked.
Sure.
And hugely bought.
Okay.
There is no room on both sides. It's stacked on the wall. It's not even hanging. And people are just walking in and buying and going. And that's because of their maturity of artist.
But was it affordability also?
Yeah, that's what I was saying. That's because they have understood the market. They've gone by economies of scale. And they're prolific in their paintings, and they've lowered their price.
Sure.
So, but their paint is fantastic. The paintings are, the material, whatever they've used, it's all fantastic.
Interesting.
But here, it's, the whole attitude is quite different. We have to break it. We have to make artists understand what and how to go about selling their art.
So that is an important point that you've raised, and we'll go to that in the second part of this conversation. But I do want to talk about buying the art in the first place. So we've talked about the fact, Mitu made the point that the known artists in India are very few. And ultimately, if you're talking about buying art, this is something that you go to, and Ketan, you know this for a fact, you go to once you've achieved a certain scale, once you've made investments in the equity market and you've achieved a certain amount of wealth. You look for the good things in life. You have a good home. You want to display a beautiful piece of art. There's a difference between having an artwork, which is a statement piece, and there is a difference between buying a piece of art thinking that you could sell it down the line. How do you draw that difference?
Before answering that, I would like to add something what Mituji has stated. I want to state that the display of art, when you said how is it, we don't have much display in India, frankly.
Yeah.
I would like to compare it the total Indian art gallery as well as the museums which are there in India. And if you go to only one district in New York, Chelsea, Manhattan, it has more galleries than entire India.
Wow.
Yeah.
So this is the way display is required.
Sure.
That kind of display is required. Secondly, I want to just compare to look at the how people want to put their place in art in the home. If you look at the property prices, how they have moved, 10 crore to 100 and 700 crore flats are being sold. Average ticket size is 50 to 100 crore of luxury, semi-luxury or whatever. I have seen not a single art in those homes.
Oh yeah.
Not a single art. I can quote one of my very good friends who has a 15th story building for himself and his family. Not a single piece of art is there.
Why do you think that is?
People are not understanding that art is for appreciation as well as investment. You appreciate something and then it's a long-term process. Equity market, we generally believe 1 year is the long term. It's not that way.
So you're saying that you buy artwork, and of course you could buy it for different reasons. You could be walking down the street and you could see a street artist put something together, and you can buy that just because you'll appreciate it.
Yeah.
But when you've reached that stage, as you pointed out, you buy it because, yes, like I was saying, it is a statement.
It's a statement.
But it's also something that you could sell. But where would you sell it, and why would you sell it? Is the question.
The question here is the sellability is also restricted as the buyers are restricted and the visibility is restricted.
Right.
It's a vicious circle. Who comes first? The chicken and egg story.
Right.
So the more display will happen, we have very good auction houses over here like Saffron or Ashtaguru. They are doing great work. Absolutely. Right. Dinesh Wazirani ji or Tushar Sethi ji, all are doing great work. Kiran Nadar ma'am is doing great work. There are museums being set.
Sure.
Hero Honda, Sunil Munjal is setting up a museum in Goa. All those things. But they are individual efforts. We need a collective effort on an India scale basis. And also government's efforts are also needed. This is the way art will flourish. Yes, people in Barnes have asked me, Barnes Museum in Philadelphia, is there art in India?
Which is shocking.
Which was shocking to me and my both. We were stunned, spellbound, stunned, and we could not answer for 2 minutes.
Are you shocked by that statement,
I'm
Mithun?
saddened.
You're saddened by that
I'm
statement.
saddened by the statement, but it's a truth.
Yeah.
It's a truth because here, every second home, there's an artist. But it's not a collective, like, Ketanji has said. It's not a collective effort. Everyone wants to be isolated and try and do the thing in their own way. It's not to be done like that. If you want to really grow, then
Collaboration.
government, collaborations, interdisciplinary, not only with painters and photographers, dancers and singers. I do that in all my shows.
So I have a question, and this is to the both of you. Both of you can come in on this. I'll start with you though, because you paint as well, and you invest in art. So first, from your perspective, art is something that is so subliminal to each person. I look at any of the paintings in this room and I will have a different interpretation. Of course, there will be the marketer that pens something and says, this is what the artist thought. But then I might feel something else entirely.
Interpreted.
So the question is, how do you as a potential buyer of art value something? Because I could theoretically, hypothetically, look at a painting that you've done and value it at 50% more than the other person does, anybody else that looks at it. So it's so subjective that how do you put a value to it?
So it's actually, Alex, it's not so subjective anymore.
It's not.
It used to be in an era where things were not transparent. But today, things are transparent. Artists must realize this, that it is not transparent, it is accountable and it's measurable. So there are three different kinds of buyers. Someone can buy for passion, and that means his ROI is already taken care of because he's got his gratification. It's done. Someone can buy for badge value, like you were talking about, it's a statement. And you've got your gratification. I own a Hussain, and that's it. Okay, and it puts you, it piggybacks you onto a branding of Hussain. So that's fine again. But we are talking about investing in art. Now, if I'm investing in art, tomorrow, if you want to invest in the stock market, will you just go out there, learn the candlesticks a bit, learn the moving averages, and learn, the CAGR of this is this, and then put it all together and say, I know which stock to buy? Will you do it that way?
No.
Or will you go to a wealth advisor?
Or I would study the company and look at the potential cash flows.
Even if you study the company in isolation, you will never be able to do it like a wealth advisor who's dedicated to that. If today a startup wants an investor, will the investor come out into the market to search? Will the startup go, no, there's a VC. The VC will do the due diligence.
So who does that for art?
So for art, it is the galleries like Dolna and many other galleries, whoever. But we are the people who are dedicated to this. We know the parameters by which an artist can be called investor ready. Okay? You may buy a piece of art and tomorrow that artist may decide, I don't feel like doing art anymore. I just want to do something else, And what do you do with that piece of art? It's not investment. It was passion, it's fine. So what we have to do now is investors must come into the picture, come to galleries, talk to galleries like Dolna and other galleries, find out and tell that this is my budget, and this is my window of investment. And we will then package a whole deal.
Understood.
Yeah.
Okay, so that's interesting. Do you agree, or do you think that there's nuance?
There are different ways to buy and there are different ways to hold. I would just make a statement which says, it has been a general rule, if the first generation buys art, generally the third or the fourth generation sells. Art requires maturity. A painting requires a maturity time to get appreciated. Artist also requires a maturity time to get appreciated as well as get valued. So those valuations happen over a period of decades. It's not going to happen today and tomorrow. It's not like stock market investing. We know a fundamental, next 5 years we know what it will do, and then the art is a very different form of, it's a very long term, certainly it's like decadal. if you look at I took an example of Gaitondeji or Van Gogh or something. Look at the art when they were selling those art. Gaitondeji paintings were selling for 1,000 rupees or 500 rupees. Van Gogh could not sell.
It's worth what now?
It's worth like 60, 70 crores. Hussain Sir paintings was being sold for 40, 50,000 or maybe 1 lakh. The painting which sold for 120 crores recently, I think the painting was sold for $1,000 or 1,000 rupees. I don't know exactly price, but
the original.
The original. So the original painting, which was in, I think, Sweden or somewhere.
No, I'm saying the original sale took place
at those price, on those. So that maturity level, 40, 50, 60 years of maturity of art is there. And also I would agree with, generally one of the corollary to this is if the artist has expired, who has become famous in his lifetime. That is where his why value appreciates disproportionately, is that he dedicated his life to the art. Not something like I'm doing art today, tomorrow I'll do something else, like Mithu said. It is not going to happen that way. We know we need dedicated artists also who will spend their lifetime. And most of the artists worldwide, except Picasso or some of them, mostly have died either poor or pauper.
Unfortunately. Which is why it comes to the second part of this conversation, Mithu. You've done this successfully, but you do more things beyond just paint and sell your own art. You facilitate for other people, and I will come back to you on this one as well. I mean, I think a lot of people discovered even during the pandemic that they might have a penchant. And if not just a penchant, they might have a talent for art. But they have, like a lot of people do in the realm of sports and in, the performative arts, decide that there is not enough a market for them to justify leaving their 9 to 5 or 9 to 6 or 9 to 9 job, which is remunerative, to do this full time. Why do you think that is?
See, I'll tell you, every startup starts with a pain point. Yeah. You know that. Yeah. So my pain point was exactly this when I set up Dolna. Right. And I saw that institutes, colleges, they're teaching art. I was in Shantiniketan. Right. And I'm seeing that they're teaching. And there's a huge repository of outstanding talent. Right. Unheard of. If you go and see, you'll realize what kind of talent. But they don't know what to do with the art. They don't know the next step. So when I saw that, I said, we need someone to hold their hand, to guide them, to mentor them. So my belief is that if you're an artist today and you're starting out in life, get a mentor.
Get a mentor.
Get a mentor.
Okay.
Believe and trust in him. And then find your way. You can evolve beyond the mentor also.
Ultimately, you're a collector of art and you probably look at a different spectrum of art. And I take the point, right? Ultimately, you have to put bread on the table. You have to keep the kitchen fires going, as Mithu said. But then how do you elevate beyond that?
Look, always, unless there is deep pain, the art will not flourish in the artist. He won't find himself, as Mithu has said. He has to find himself. I have seen Mark Rothko paintings, and means when you go there, you get immersed, you can start crying if you understand that art. You need to know the journey of that artist. You have seen Gaitonde painting, he makes you cry because you know the story of the artist. Those kind of things give the value to the paintings which you have been saying, why some of them are valued disproportionately high. If you look at Basquiat, Jean-Michel Basquiat, he died at 27 years with a heroin overdose. But his paintings sell for hundreds of millions, or maybe 10, 20, 30, 100 million. So unless and until you know the journey of the artist, you know the pain he has gone through, the pain which is reflected in this art. Means if you look at Mark Rothko, there are 4 squares. But why they are there? Why that paint was used? Why that kind of time? What time frame it was? If you look at blue period of Picasso or the red period, where he started doing cubism.
But for a lot of people, this is going to sound like Greek and Latin.
Yes.
So therefore, the question is, for my audience, which is largely, of course, they're familiar with things like Picasso, they're familiar with things like Hussein. But to start things out, to cut their teeth, do you think that they should buy for themselves first and then think about investing later?
It is always good to start buying. You may make mistakes, you may not make mistakes. Sure. But always there is a tuition fee to be paid. As we say in the market. A loss is a tuition fee. A bad investment is a better tuition fee. Yeah. Nobody teaches better than the market what teaches you. So जूना पुराना कहावत है बाजार में भाव भगवान है. तो ये tuition fee है, and it is a process which everybody, and we are a very growing country.
Sure.
And the capacity to invest in art is disproportionately going between the Gen Z and the large corporate players, individual investors.
Self-actualization. Ultimately, it will lead to spending on other things. But having said that, and just to close out this conversation, you've given some advice to young artists, people that want to start out, maybe older artists who've gotten tired of their corporate job and want to try their hand at painting that they never did. But would you say that buying a painting that you like, that speaks to you, even if it may not be the best investment down the line, is better than choosing something that you don't understand? Because at the end of the day, if you're not able to sell it, you still have something to admire.
Yeah, no, we can't look at it this way.
No,
not at all. Because what you love and you buy is already serving its purpose. You loved it, you bought it, and that's the end of the story.
First type of buyer that you spoke of.
That's the passion buyer. But when you're buying for investment, it's a science, it's a strategy.
Sure.
And it must be understood. Today, Deutsche Bank, it has, I think, 60,000 artworks across 900 locations. Taj, the hotels, they have 4,000 artworks.
Sure.
It's a parallel economy running.
Right.
It's an investment. Hotels is one. There's a retailer who everyone knows, the money, I think, the D-Mart. He's looked at more as a real estate than retailer because every D-Mart is owned by him.
Sure.
He's not paying rent. So, so now what I want to tell is the corporate collective must look at art as investment. One, okay? Where the artist is concerned, he must see how to get auction ready.
Sure.
How to get, market ready. And doesn't mean, of course, art and commerce are considered like strange bedfellows. But today is the marriage. It's that today is the marriage. It's beautiful. If an artist can be rich, if it's not the money. The artist can't stop painting.
Yes.
Okay, if there's a buyer, the soul gets happy.
Sure.
And it blooms even further, it evolves. So now I feel where emerging artists are concerned, understand the market, find your voice, find your style, work on it, get a mentor. But between the age of 35 and 45, when you are at your peak, your hands are steady, your eyes are the best, everything is working for you. Keep some of those best works with you.
Sure.
And you become a patron of your own art.
Excellent.
Okay.
So, and speaking of patrons of the arts, let's hope that we kickstart the Renaissance movement for India in the art world. Thank you so much to the both of you for taking the time. And to you, dear viewer, hopefully we've given you a sense of what the art scene looks like from an investor's lens. Let us know what you think, and do stay tuned. Lots more coming up on NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely. You can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
What does Diwali mean for you? Lights, crackers, sweets, parties, family, profit.
Join us this Diwali
As we add more sparkle to your portfolio.
more punch to your balance sheet, and more flavor to your investment.
Because this festival of lights is also a festival of growth.
This Diwali, let's ignite your financial journey together.
Wishing you prosperity,
success, and light.
From all of us at NDTV Profit. Because we work for your profit.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets and the voices that
It's that time of the year when our inboxes are actually filled with season's greetings, our diets are actually filled with laddus and mithais. Stock markets, well, it's the festive optimism that we're talking about. Who better than someone who can decode this Diwali dhamaka for us? A man who's actually been ringing the bell for decades with good multi-baggers. We have Sunil Singhania joining in. Welcome to the show. Should I call you Sunil the multi-bagger? Because that's what I have known you since the time we started working in this industry. But Happy New Year and season's greetings to you and everyone at home as well. How would you actually look to decode this market right now? Because this Samvat has come in such a time where everyone is trying everything when it comes to domestic markets. You're looking at how do you spur demand from here on? The question is growth, the question is demand, lots that people are thinking about. How would you describe Samvat 2082?
First of all, happy Diwali to you and all the viewers, and thanks for the lovely compliments. When you say decades and decades, I start to feel very old.
Not at all.
So I think equity markets always have phases. And obviously, most of the phases for Indian equity markets have been great. But there are some phases where markets don't make you money or even give negative returns. And I think last 1 year has been that phase where I would say that given all the uncertainties, we have come out pretty well where, okay, we have not made great money, but we have not lost money. In fact, someone to Savat equity returns in the equity markets are almost equal to the fixed income returns, but obviously, as human beings, we tend to be a little greedy, we've started comparing us with gold and silver and China and so on and so forth because of the last 1 year of recency bias. As far as the Indian economy is concerned, I think we went through some tough times last year, and predominantly, when elections happen, things do slow down. Politicians are busy, the government is busy. You have the code of conduct which comes into play, so new projects don't get launched or announced. Budget got deferred to July, and therefore the ministries got allocations only in August. And as a result of it, September 24 particularly was a very soft quarter with GDP growth of 5% and profit growth of only 3%. I think after that, every quarter we have inched up. We still are a little bit away as far as the corporate profit growth is concerned, but GDP is trended up well. In fact, June numbers were crazily high at 7.8. But we can say with a lot of confidence that we have reached the 6.5–7% of GDP growth. And we are very confident of profit picking up pace, and I'll come to that. I think globally also things have been very volatile, multiple wars and this tariff thing. And I think we are slowly getting over that.
So tell me one thing, what's happening in the markets right now is you're looking at expectations versus what is reality. Expectations were very high that the markets built taking the returns that people got during COVID, post-COVID, and that's what people are benchmarking returns to. How would you advise retail investors to actually navigate this kind of a situation? Because it's always the retail investors that get stuck, and we'll talk about IPOs also on this aspect, but it's the retailers who are the last leg.
In fact, I would say that retail India has matured significantly, and that's why you are seeing consistent maintenance of the SIP flows. So I think retail investors are now understanding that equity returns are not about 6 months or 1 year. Equity returns are a basket of 5, 10, 15 years. And as you rightly said, when markets do very well, which happened between 20 and 24, we start to believe that this is going to continue forever. And that has sort of been a little bit of a dampener in that respect. But when we meet our investors and when we talk to friends in the markets, I think investors are now pretty okay that if you are able to make 12, 14, 15% returns compounded in the equity markets year after year, they are pretty satisfied. I think obviously recency bias has crept in other asset classes. So now people have started talking about investing overseas, investing in gold, silver, because of what has happened over the last 6-8 months. And I think that is a circle. But I would say that retail investors have matured a lot. And our advice would be that don't lose confidence just because 6 months or 1 year returns have not been great. In fact, we are moving to a phase where definitely returns will start to show up.
Okay. So there are two sides to the story right now. You're talking about someone who's already invested, who's probably not lost money, but is pretty much at break even right now, and someone who's probably looking to make fresh entries. Fresh entries, obviously, you're talking about something which is going to be upwards from here on. Someone who's really been invested in the markets is really being patient right now. Would you say the pockets of opportunities then should differ? So let's talk about both of them. One, if you're looking at someone who's entering the markets now, what are the opportunities that you're seeing which they should start exploring now?
No, if someone is not invested in equity markets so far, I think this is the best time to invest, and every time is the best time to invest because this is the only asset class which will give you double-digit returns on a consistent basis. I don't see any other asset class giving that. So I don't think they should wait to say that now I'll invest or I'll wait and so on and so forth. Even those who invested pre-COVID saw a markdown of 25%, but from even the pre-COVID levels, markets are up 3x. The funds, markets are more than like 2.5 times. So I think for investors who have not invested, I think you should do it today. There's absolutely no doubt about it.
But then the debate comes in, Sunil, that should it be gold, silver or markets? And that's what you started.
No, I am very clear. Last year I was a little bit more optimistic on gold. I am very clear that 1 year return for gold and silver will be negative. That is my view.
So are you actually relating this to history, what has happened earlier? I think there was a time when silver touched 70, 75 as well, and then half.
I don't track gold and silver because there is no fundamental way of telling that gold should be at X price or Y price.
Okay.
You tell me one fundamental research or forward me one fundamental research on gold. It's all technical.
Okay, so tell me one thing. Someone who has bought gold, has made the returns by now, would you say sell that and invest that money in equity?
If you are significantly overweight gold, you should definitely do it. But if you have just bought gold because every year we buy some gold, I don't think you're going to sell the gold at your house.
Yeah, because right now all housewives are talking to their husbands saying, I think we've made more returns than the investments that you've made in equity.
They are always right and they're always smarter. We don't have any debate about
that. Okay. So, we're but there are a lot of global companies as well, Sunil, right now when you talk about them, where the company's market cap itself is probably equivalent to our entire stock market's market cap. And that's where the question comes in, are there more opportunities in the domestic market, or people should start diversifying to overseas opportunities as well? How would you look at that angle?
See, one is, the few companies you mentioned where their market cap are equivalent to our market cap, say Nvidia or even Apple or Microsoft. These are not US companies, these are global companies. More of their revenues come from outside of the US and they cater to the entire world. So I don't think it's a right way of saying that, one company's market cap is equal to India's market cap. But at the same time, looking at the size of India and looking at the pathway ahead in terms of growth, very clearly India has huge potential and huge opportunity.
So where are you seeing the potential now?
No, we are equity guys, so
no, within equity, which are the baskets? Because currently, post GST, the thought process was it's going to be consumption driven. Now everyone is watching out for what do the GST collections look like. Has the pass through happened? And if the pass through has happened, it's more going to be of a volume game for consumption as well. I mean, you're not going to see that kind of reflection come in terms of profitability, in terms of margins, right? So again, the question is what happens to earnings of the consumption-driven companies. Secondly, the debate is now consumption versus Capex. If the collections are not to that extent, will the government spend when it comes to Capex?
So if an investor keeps on micro-analyzing stuff, they will not make any returns. I think from an investor's perspective, first be convinced that you have to invest in Indian equities. I think that is a bigger question. Coming to all you have mentioned, I think every sector will have their pluses and minuses, but ultimately you'll have to take a view from a 3, 4, 5 years perspective. Just because GST is cut and near-term growth is there, not there, I don't think you're going to jump in and buy and sell anything and everything. It's more for traders. 2% bana ke nikal jao, that is not what we do. Okay, so everything you do is based on the perspective whether this company can double the profits in 5 years or 4 years. That is what we look at. Coming to sectors, obviously financials, we continue to be positive, but within the financial basket,
there are multiples that have got clubbed into financials.
Yeah, so it's changed. That is what I was coming to. Financials is not only banks. Financials is now, capital market companies, asset management companies, wealth management companies, insurance companies, and so on and so forth. So one has to be, even within financials, be clear of what you want to invest in. Pharma is a good sector. Again, pharma is domestic pharma, global pharma, CDMO, API. Everyone will have their own dynamics, but we are positive. Metals, selectively, we are positive. I think capital goods, we are selectively positive. India has long, again, roadway in terms of Make in India and even export opportunities. And some of the new age companies, I think eventually we'll have to take a look at them.
If there was 1 year there we need a Saal Mubarak, in the last 4 or 5 summers, I think this is it, right? So, Naye Saal ki Shubhkamnaएं, Nuttan Varsha Abhinandan, Happy New Year, whatever you call it. The question to Rhythm Desai is, will the new somewhat usher in a happy new year for Indian equity investors and maybe for global markets as well, because these are keen eye on the globe. And Rhythm, thank you so much, of course, for joining in as we do every year now for the last so many. And I wonder if a lot has changed between the last 5 months that we spoke 5 months ago and now, because the world still seems to be one tweet or a Truth Social post away from uncertainty. Is it possible to aspire a happy new year when such circumstances surround us?
First of all, to all your viewers, Shubh Deepavali and Nuttan Varashna Abhinandan to the Gujarati viewers. And before I start, I want to tell your viewers that you did an amazing interview with Manish and Ramesh, and everybody should see that.
Okay.
That's a one-on-one on how to invest, because we may not get into that territory, but those are two geniuses from our stock market, and it was a brilliant interview, as you always do. Okay, so yeah, the world, I mean, see, Neeraj, uncertainty is part of life. Okay, I will tell you something. When I was walking into this room, one of my colleagues walked past and she said, "Oh, so you're doing an interview?" I said, "Yes, maybe the last one of my life." And she said, "Why would you say that?" So I said, "This morning could have been the last one of my life." The point is, uncertainty is so underestimated. And we only feel it when it creates events around us. When we lose a near or dear one, when the markets move a lot. But life is uncertain. So there's nothing unique about the circumstances today. It has always been uncertain in the stock market. I think the epitome of uncertainty is the stock market, and it remains so. Do I have any idea what will happen in the next 12 months? No. Did I have any idea 12 months ago? No. What we do is lay down a framework so that you can think through it. And the most important thing that you can do is sit through that. Because sitting tight and doing nothing is the best way to accumulate wealth.
Okay. So
everything else is only going to destroy wealth. If you behave randomly to random events that are happening all the time, it's very hard to make money. Or rather, I shouldn't say make money, but very hard to create wealth.
That's true maybe for wealth, for life, everything. By the way, you had me scared for a minute out there. I was wondering, why is it that I'm not getting a chance to talk to Rhythm again? But okay, no. Well, long life, all 20 fingers crossed for that. Long period in the equity markets for all of us to gain from your wisdom. But so let's talk about the framework then, Rhythm. What's, to your mind, the framework as we look forward to the next 12 months?
So the framework is as follows. Coming out of COVID, I think the government and the central bank tightened. And I'm referring here only to India right now. We'll come to the world a little later. Because of the fear that inflation will surge. It was the right policy to do. Because coming out of COVID, there was so much pent-up demand. It was likely that inflation would have surged. And my God, were they successful. Okay. Supremely successful. India came out of COVID with the least inflation problem relative to the whole planet. Everybody else was grappling with much more inflation, including China. So that was a hugely successful policy. But as usual, when you are very successful, it takes time to turn the ship. Right? The ship doesn't turn as quickly. The ship is of that nature. India is a very big country and you can't turn this thing around at will. And so we arrived in 2024, and because of extraneous circumstances, it was an election year, spending got curtailed, and we had a really bad monsoon, in terms of heavy rains. So by the September quarter, real rates were high, and the fiscal deficit was annualizing at 3.4%, down from 6%, so it had halved. So invariably it caused the economy to slow. And I think a decision was taken that we need to pivot. It takes time to move the ship. The pivot happened in February with the RBI policy, and it has been followed by a cumulative interest rate cut, CRR cut, infusion of massive liquidity, deregulation of lending, and a big stimulus from the government, which is very sweet because it's not inflationary stimulus, but it's disinflationary. Nevertheless, all of this put together in stock market terms is what we call as reflation, which is India, after many years, is trying to get its inflation higher. So we've been in a disinflationary mode, policy mode, since 2014, because at the time we were running double-digit inflation, so we had to bring it down. It took many years for us to bring it down, and then it has gone and swung to the other side as it usually does, and now we're trying to reflate. Reflation is super good for equities.
Okay.
It's super good for profits, super good for revenues. So the one framework that people should have is that the next 12 months ought to be a whole lot better than the last 12 months. It'll be a whole lot better.
Okay.
Now the caveat is the world, so we'll come to that, but that's the framework. When the central bank is reflating, you don't fight it. It's stupid to fight a central bank that has got its foot on the pedal for reflation, and the government is cooperating with it. So it's a combined policy. And this is also being marked, almost not noticed, because I was meeting a set of institutional clients last week, and they're not even They do not even notice the amount of reform that is happening at the state level. Just take the case of Maharashtra government. Okay. It has allowed labor to work longer. It has allowed establishments to be open 24/7, and it has launched a capital subsidy scheme for GCCs. You look at what Telangana has done to its electricity sector, and we don't have the time here to go through details, but the state level reform is at another level now. And I've been saying this, that there's only that much the center can do. Unless the states cooperate and also do their bit, it's difficult to lift this. But let me say this here, that we were running a template for 6.5% growth because we had to curb inflation. I think now the template has shifted to 8% growth. And I'm not referring, don't get fooled by the real growth of the last quarter. It's nominal growth that matters.
Yeah.
So nominal growth with modest inflation is the mix for equities. So we're going into a period where real growth probably goes to 7.5, inflation goes to say 3.5 or 4, and therefore we have nominal growth of somewhere between 10 and 11, which will support earnings growth in excess of 15%. That, I think, is the framework for the next 12 months.
Yeah, but this is great if it happens, right? But we indeed see growth at 7.5. So you think this whole push of the central bank plus the consumption push that the government has given leads to that 7.5% growth, or is there something else on the global side that needs to fall into place?
The world obviously is a messy place. I said that last year also, and I'll say it this year, and I'll keep saying this until it all falls apart.
Okay.
Because I don't know when it will, but it is heavily indebted. It is aging, and on top of it, we clearly have a crisis of confidence with respect to the medium of exchange or currency.
Yep.
So that is certainly brewing in the background, and this started with the reneging of contractual obligations that came out of the Ukraine-Russian war, and continues to be the case. And that's probably the reason why there is such a big bid on gold. You cannot actually just ignore that.
The one in 2022, right?
Yeah. So you cannot ignore the bid on gold, and it is clearly, I have a chart which I have been using for 25 years, which is Sensex in gold terms. It's gone like this.
Oh, yes.
Right? And you can buy, this is just about the least amount of ounces you get with the Sensex as you have in the last, say, 40 years, with the exception of the low in COVID, the low in 2008, the low in 2000. So those were all crisis moments. We have no crisis here. So we are kind of trading at crisis valuations, near about. In the equity markets, and it matters because somebody said, why would you measure this in gold terms? Well, it ought to be measured because gold is still the quintessential store of value. And therefore it is important to rebase all assets in gold terms. And very briefly, I'll say gold is not an asset. An asset, by definition, is something that yields an income. So equities, because it gives dividend; real estate, because it gives rent; fixed, bonds, because it gives you interest; a fixed deposit, because it gives you interest. Gold gives you nothing. It's a store of value. It can be a medium of exchange, but it's a very onerous medium of exchange. It's very hard to store and carry gold in your pocket and buy a cup of coffee with gold, and those things have not been done now for many centuries.
Yeah.
Right? It was at one point in time, gold was used as a medium of exchange, but today it is very hard. So therefore, it's important to look at asset prices relative to gold or in gold terms, because gold is the quintessential store of value. It's no different from looking at the Sensex in dollar terms, because dollar is supposed to be a store of value, or INR terms, because INR is supposed to be a store of value. Well, it's not such a good store of value, but it is still a store of value. The INR that you're carrying in your pocket will have the same value tomorrow morning.
Yeah.
May not have the same values 1 year down from now, but it has the same value tomorrow morning. So there is some store of value. The stocks you hold in your portfolio may be down 20% in one day. So they don't have any store of value attached to it. So I think there is a lot of I would say difficulty in the global environment, which may feed into India's economy. India is not a small cap stock. It's a big country with it's a big player in the world with a growing trade with the world, and therefore we'll get affected by what happens in the world. For example, if the US goes into recession, we cannot come out unscathed. Our growth rate can't go to 7.5. There will be some impact, as it has happened in the past. The impact will be a lot less today than it has been in the past, but there will still be impact. So yeah, I cannot for sure say that the growth will be at a certain level, because I don't know how these global events pan out. I don't know how geopolitics pans out. But these seem to be less settled right now than we would have hoped for.
Okay, so the follow-up is, if the US economy doesn't go into a tailspin, but the US markets, led by the AI frenzy coming off, peter off, can Indian markets do well? Because I have now heard you say enough number of times that India is the low beta market. It'll do well, it'll do less well on the upside when everybody's doing well, but it'll probably do well when not everything is doing well, right?
Yeah.
In some sense. So can that happen?
Yeah, so this I will answer a question that you've not yet asked, is why foreign investors are not buying in.
I was going to come there afterwards.
No, because this dovetails into that.
Okay, let's
do
that.
So 3 reasons.
Yeah.
Right? One is that they still have a problem with India's absolute valuations. The relative valuations now are a whole lot better. 1 year ago, China was at 9x, India was at 20x. China is now at 15 times earnings, India is still at 20. So relative to China, India is more attractive than it has been for most of the last 25 years. In fact, relative to emerging markets as a cohort, India is more attractive than it's been for most of the last 25 years. Okay, so this is clearly now the relative valuation is good, but the absolute is still where it was. It has not moved a lot. I mean, earnings have not grown that much and share prices have not moved that much. So we're still dealing with a 20 handle on the earnings multiple.
Yeah.
The second is that India has no AI trade.
Yes.
And especially in the last 6 months, the world has been all about the AI trade. And contrary to popular perception, the US markets have not done well.
As a full cohort. I mean, just
SPX has not done as well, because SPX still has a large share of non-AI trades which have been dogs. Whereas markets with a large proportion of AI trades,
Taiwan,
ex-Europe, where defense has been the theme. So defense and AI have been driving a lot of markets up 20, 30, 40%. That's what markets are up in the last 12 months. And that's why it feels like India has been in a bear market. Because if you bought China, you'd be up 40% relative to India in US dollar terms. And the third reason, foreigners have not been able to participate is because the domestic bid doesn't go away. So they are up against a domestic bid, which means they need to take share prices a lot higher before domestics actually offer stock. So that's the reason why foreigners have not been there. And this dovetails into your point, which is, if at some point in time the AI trade unwinds, and mind you, if it's a crash like 2000, then all bets are off. No market can survive a crash like that. India will perform relatively better, but who cares? Because things can be down 40%, India can be down a lot less, but it will still hurt. But India will outperform. If the AI trade wanes, then I think you will see both absolute and relative performance from India.
Okay.
And that is, I think, the key. So it is not about, and the second thing is also about growth. Is that on its own, if India's growth improves, then it will offer a better opportunity, which I think is almost a given now, that India's growth will be a whole lot better in 2 quarters from now. I don't know about the AI trade. I have no expertise to judge when and where the AI trade pops and how it pops and where it goes. But that is another key.
the NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
What does Diwali mean for you? Lights, crackers, sweets, parties, family, profit.
Join us this Diwali.
As we add more sparkle to your portfolio.
More punch to your balance sheet and more flavor to your investment.
Because this festival of lights is also a festival of growth.
This Diwali, let's ignite your financial journey together.
Wishing you prosperity,
success and light.
From all of us at NDTV Profit. Because we work for your profit.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting.
All that glitters in NDTV Profit. I'm Vikram Oza. Hello and a very warm welcome. It's that time of the year when the festive cheer is very obvious. The Diwali sparkle is very, very obvious, and where best to capture it than a jewelry store? And which one are we at? It's in a bustling area of Mumbai. It's Dadar. And the frenzy, the shopping frenzy is well and truly on, even in jewelry shops, despite the high prices. How exactly is demand panning out? GST reforms on one side, you have gold and silver prices hitting the roof on the other side. Let's ask someone who would really know. The Chairman and Managing Director of PNG Jewelers with us, Saurabh Gadge. Such a pleasure to have you with us.
Thank you. I'm wishing you a very, very happy Diwali.
To you too, Saurabh. And I want to know how happy this Diwali is. For a jeweler like you.
Can't get happier.
Is it?
I think it's been a very positive Diwali. Start has been good, and I think a couple of months ago there were a lot of a little fear in the market. How would Diwali react to the high prices? Will consumers be out there shopping? Will it be online for what we're expecting? But I think it's been a blockbuster. There's huge demand. Gold, silver, diamonds, it's all there. And like you said, Diwali is the busiest time of the year. And for us jewelers, this is like the time of the year when we pray for it to go well. And I think that's what we are really expecting and hoping this year is going to be the same one.
So explain this phenomenon to us, Saurabh, because, you know, you see gold prices which have remained at elevated levels. Silver has hit the roof, and how? You're talking about the last month itself going above 50% kind of increase. In that kind of scenario, if you're saying gold is moving, silver is moving, and diamonds are moving, despite the lab-grown diamonds that we've seen in the markets, there is something that is a phenomenon that's happening. So explain it. Why do you think that's happening?
I'll break it down for you. I think it's not just gold, silver, diamond, it's also the equity markets and real estate. Everything is moving.
Well, I can tell you about the equity market, Saurabh. It's not as booming as what you're making out the jewelry market to be.
No, there can be different variations. But if you look at gold and silver, they both are playing unique roles. Gold today is looked at as almost like a currency. And gold rally started from central banks, mutual funds buying gold, which has now percolated down to the retail investors. So now the rally we're seeing is people looking at buying gold because it's safety and it's a good returns in the near and the short future. Silver, on the other hand, is more of a geopolitical tool, I think, which is being bought by countries to keep their dominance in this race for AI, microchips, EV. So silver has a huge industrial use. So silver has seen more buying right now from governments, central banks, which is at a level which was unprecedented in the last maybe 2 decades. So I think both gold and silver are playing different parts, different roles in this entire space. And as retail consumers, people are seeing that there's a huge positivity left in both these cycles of gold and silver rise, and they want to be a part of that. So if we break it down, there is gold rally, which is driven from the point of view of investment. There's silver rally, which is from the point of view of world dominance in EV, in microchips. But both have now gone to a level of retail consumer, which is now entering the markets in a big way.
So when you talk about jewelry, you're talking about investment versus adornment. Tell me how that has changed. Consumer sentiment and approach seems to be changing. Obviously, the reasons you're listing out, the GST reforms putting more money in the wallets of consumers, has to be some kind of assistance. But when you see these prices move at the level at which they are, one wonders if we're doing it out of FOMO, or is there more to the investment story that we are missing out that a lot of consumers are seeing over here?
See, consumers are looking at jewelry primarily for adornment, which is a universal truth. Worldwide, bars and coins have been investment and jewelry has been adornment. In India, it's a hybrid concept where your investment. So you used to buy jewelry, which is worn, and also investment.
Yes.
So typically jewelers used to sell 80% jewelry, 20% used to be bars and coins. Today that ratio has become 60-40. So you are selling 60% jewelry, 40% is bars and coins, which I think is increase from people's appetite to invest in gold at a high level. So that ratio has changed? So that ratio has changed. So you're seeing 40% people today buying gold as investment. So that means they're buying bars and coins.
Right.
And the balance 60% are buying jewelry. But with the higher prices now, we are seeing that the jewelers are still happy because they are seeing value growth. Another factor which is favoring the entire jewelry sector is the move from unorganized to organized.
That's a big one.
And that's really 10 lakh jewelers pan-India. And if you look at it, maybe in the early 2000s, it would have been like 10% organized.
Yes.
Today we're talking of 45% being organized, and that is moving at a very fast pace. So by 2030, they're saying almost 70% of India will be organized in the jewelry sector.
And still, there is a cultural rooting, how Indian consumers buy their jewelry. Right? I mean, going to your local jeweler, going to the unorganized sector is something that we've done so consistently over the years. It's difficult to break away from the habit. And yet there are specific reasons why you would go to the unorganized sector. It's also for value. It's also to be able to get that family connect, for example. So how much of what is happening in stores like yours, is it about melting old jewelry, refurbishing it? Because I'm hearing that a lot of that is happening too.
Absolutely.
So that approach, how is it changing with consumers at your level in shops? I want to understand that.
Absolutely. So now this family jeweler, so when you look at a family jeweler, what does he do? He's like a family doctor. He'll be with your family for generations.
Correct.
He'll be advising you, guiding you, helping you in making jewelry, repairing it, polishing it, whatever you need in that entire space. And there are organized players who'd be looking at doing jewelry which is more or less off the shelf, and who have a relationship of maybe one generation.
Right.
Fortunately, when we say at PNG, we say we are one of India's only organized family jeweler, because we are spanning for almost 200 years now.
Right.
The generations of people.
Introduction. Then I also met my wife. Akshata, who is of course Indian, and even though she's South Indian and I'm Hindu Punjabi, so there was some learning to do on both sides. Although thankfully not as dramatic as that movie Two States, which I thought was, on reflection, a good thing. But I didn't know Bangalore. I mean, I came to India, but I didn't know Bangalore, which is a city that I now have a most close connection with through her, and of course my in-laws. And I think, at least I think
they're over here.
Yeah, they're somewhere here. I hope. There they are. There's Narayan with my in-law. I don't know where my mother-in-law is if she's here.
Behind Mr. Murthy.
Oh, she is. Both of them are there. There they are. And these two, obviously, then coming here as family rather than almost different when you're a tourist is very different. And they are both wonderful, not just grandparents to our two young girls. But you asked about the links politically. They were also very helpful in all my election campaigns. Because, well, they would come. They would put on my hoodies that we have, and they would just go on, knock on doors, deliver the leaflets, collect the voting instructions, and they've done that on all the elections, which has been very helpful. But actually, the most important thing that they have done for me is ensure that I've fallen in love with RCB. Yes. And that, I think earlier this year, I was very fortunate to go to Ahmedabad with Akshata to see the IPL final. Salakap Namdu, I'll just put that on the record. To RCB fans here. But actually, I'll finish on this, right, because that, maybe this will be better. Yeah, I think actually being at that final really struck me, because I went down to see the team afterwards and to celebrate. And actually, there were so many Brits there. So Phil Salt, Liam Livingston, playing in the team. Jacob Bethel had been there earlier in the year, and Mo Bobat is a director of cricket, and it demonstrated those close links between our two countries. But then also, if you think of British cars, you think Jaguar, you think Land Rover, of course, made in the UK, but now owned by a great Indian company in Tata. So it's a sign of the increasing bond between our two nations.
Can I just jump in for half a second? You were talking about your Indian roots. Is it true that you proposed to Akshata on a cliff in California in Kannada?
That is exactly true.
Okay.
Yeah. You're very well informed.
This is what you expect from a good Indian son-in-law, even though he's not fully Indian son-in-law, but he kind of, Indians feel that way. The moment you come to a public gathering, the first thing you say is tell your in-laws how wonderful they are. Mr. Sunak, full marks, 10 on 10 for striking just the right notes as we get started. Ladies and gentlemen, she'll be here on stage a little while from now, but can I request you to welcome the serving Prime Minister of Sri Lanka, Harini Amarasuriya, who's just joined us. Ma'am, we are delighted to have you here, and we look forward to hearing from you later in the evening. Thank you. Padmaja, the perfect Indian son-in-law?
Absolutely. You know what they say, a family that praises its in-laws stays together and campaigns together. But also I have to ask, when you're watching an India versus England match, who are you cheering for them? Because that's a tough choice.
I'm obviously cheering for England, but have a very soft spot for India, as you can imagine. And that's why I get my fix through RCB. And that's my other great passion, as well as my home football teams. But I'm also actually, my constituency in England is in Yorkshire, which is probably the most cricket-mad part of the UK. And I'm very fortunate in that, because there is cricket everywhere in my life at home. And one of my favourite players, growing up, was Rahul Dravid, and trying to copy his brilliant technique. But Joe Root is obviously currently the best English batsman, scored more runs than anyone else, and he's a Yorkshire cricketer. So
but can I just ask you, sir, Bumrah or Anderson? Who would you pick?
So I was very fortunate to recommend to His Majesty the King that Jimmy Anderson should be awarded a knighthood. And we spent a lot of time, as I've just done.
But objectively, sir.
Sorry?
Objectively.
Objectively, his career over the 20 years that he has been in the England setup is genuinely inspiring. And having spent a bit of time with him, not only is his commitment and his work ethic inspiring, I think his humility is quite extraordinary for a top-tier sportsman, and that really struck me. He has a very special personal story, his background coming to the sport, and I'm delighted, because we obviously, unsurprisingly, we celebrate batsmen a lot, but Bumrah is superb, but Jimmy Anderson, Sir Jimmy Anderson now, I think would have to be my pick.
I can go on with the cricket questions, but then
I know, otherwise we can turn this into a cricket interview. I think you might want to talk about some geopolitics, I think, at some point.
Yeah, you know, we're talking about the FTA, and it's been signed by India and the UK. We had the Prime Minister here last week, and that pretty much sealed the bonhomie. Where do you see the relationship between the two countries going next? Where does it go from here?
It was great to see the trade deal being signed, something that I started work on, and I'm really pleased that the new government concluded it, and the great couple of trips we've just had. Modi ji coming to the UK, the Prime Minister coming back here with a big business delegation, which was a great success. Now, look, I think trade, beyond the trade deal, there are two important things that trade deals signify. In my mind, beyond the tariffs that are reduced here and the barriers reduced there. The first is, in a world that is becoming more protectionist, which I know we'll talk about in a little bit, actually countries like the UK and India signing a big, deep trade deal just sends a very positive signal to the world. And I think the second thing is, what it does is, it tells businesses, civil society, cultural organizations, academic institutions that the relationship matters. They are getting a signal from the leaders of their countries that this relationship matters to our governments. And then they will go off and find ways to strengthen it beyond the text of a trade deal. And I think that's what's so powerful about it. But look, I think there are areas we can build on. And one of the things that I first started speaking to Ajit Doval a few years ago was the technology and security initiative, which is a great opportunity for the UK and India to do more together. Whether it's the joint PhDs that the University of Manchester and IIS and Bangalore offer, whether it's in semiconductors, where you can combine UK R&D with Indian manufacturing prowess. That's quite powerful. Similarly, in biotechnology, the UK has strength in vivo gene editing. India is an agricultural powerhouse. So, if you excuse the pun, there are opportunities for cross-pollination there too. And lastly, maybe in defense. And obviously India has historically had a defense partnership with Russia. And I think that has diversified over time. And I think India rightly should want to have access to the best technology when it comes to defense equipment in the world. And I hope the UK can play a part as India looks to best-in-class suppliers. And I'm hopeful that could be an area of growth going forward too.
The last several decades were about globalization, about the world being one common trading bloc. Now we're seeing more and more trade barriers being created, especially given what President Trump is doing in the United States and the ripple effect this has on the global trade order. Given that, and now that you're not in power, you can actually look at it from a technocratic lens. What's your sense of how countries like India should be navigating the turbulence being caused by the kind of tariffs that the United States is throwing?
No, look, it's an excellent point. I think I'd start by saying the old global order, the globalization that I grew up with, that came into place after the fall of the Berlin Wall, I think that is gone, right? And I don't think it's coming back. Now, we're not quite clear what's going to replace it, but a couple of themes are clear. One is that there's going to be more multipolarity in the world, and India is an example of that. And I think the second is countries everywhere are focused much more on domestic capabilities. And the reason for that is twofold, and I think this is instructive not just for India, but for countries around the world. The first is COVID. COVID, although it was of course first and foremost a health crisis, was also an enormous geopolitical event because every country suddenly realized the fragility of their supply chains. I'll give you an example. We in the UK at the beginning were very short of PPE, gowns, gloves, masks, and it got to the point where the entire country was watching to see if a flight, I think it was taking off from Turkey to come to the UK, was going to land in time, with the amount of PPE we needed so our NHS could keep going that week. That was where it got to. So because of that, every country in Europe now has a cabinet level committee that's focused on the resilience of supply chains and domestic capabilities. I think that's the first reason, Rahul. Things have changed. And every country needs to think like that. And I think the second is China, right? And China, it's clear, doesn't play by the same rules that many of the rest of us were playing by, right? They don't view trade purely as an economic function. And it has meant that countries have to think about security, IP theft, alongside trading relationships. And that's why we went through a process in the UK, as did many other countries, of taking out Huawei equipment or banning it for future use, and passing new national security acts, which mean that in sensitive sectors of our economy, we're a little bit more careful about who's investing, what are they doing, what technology is leaving our country. And as I said, those national security acts are new. Those cabinet committees focused on domestic resilience are new. They're not going away, and that's why I think the old global order, trading-wise, is not going to come back in the same form.
The United Kingdom is now in a post-Brexit reality. Obviously, there's a big part of re-establishing the United Kingdom economically and in other respects vis-a-vis Europe. But do tell us about your thoughts on that. But if I can also ask, hasn't your entire post-Brexit calculation also changed, because America looks at Europe fundamentally differently? It's not the same. The relationship has also changed. Therefore, has that impacted Britain's dynamics with Europe?
Yeah. Look, it's a really interesting question about Britain's role, especially post-Brexit. And I'm actually reminded of Prime Minister Modi ji's description of our role when he came to London some years ago, and he said, James Bond provides the entertainment and Brook Bond invigorates us all. And if I think as Prime Minister, I probably didn't look as good as James Bond in a dinner jacket. But I certainly tried to reinvigorate our diplomatic relationships by drinking a lot of tea everywhere I went around the world. But I think you can see...
many in the hall, though, who may think he came close, right? Yeah. By political standards, from what you expect from netas, that's quite sharpened up, very sharpened up.
I'll take that, Rob. But actually, you're setting an example tonight, actually, which I'm not sure I can live up to. But thank you for saying that. Now, that nimbleness that you talk about is something that I think we have taken advantage of. And when I was Prime Minister, we took the UK into the Trans-Pacific Trade Partnership, which you'll be familiar with. That's the first big European nation to join that trade partnership. Similarly, I strengthened our ties from a defense and economic perspective with Japan and South Korea. You've seen the new Prime Minister, I'm pleased to say, actually continue to take advantage of that nimbleness, Vishnu, and that is the trade deal with India, probably the deepest trade deal that India has signed, the UK first kind of big country to do that in Europe, but also the trade deal that the UK has negotiated with the US, outside of the EU, having that flexibility to talk to the Americans and find actually a positive outcome relative to expectation and many others. And so I think that's important. Diplomatically, you talked about that, economic power is shifting east. And I think that's why it's important the Prime Minister was here. The bonhomie that you talked about is strong. We have good relationships with the Gulf states, which again are part of this multipolar world. And the other aspect of Britain's new role is technology, which I know we'll get to in a minute. But the UK has 4 of the world's 10 leading universities. It is the technology superpower in Europe. More venture capital in the UK than France and Germany combined. And Stanford do an index of countries on AI. The UK comes third behind the US and China. And we hosted the first AI summit under my leadership, and I'm pleased India is hosting the latest iteration of that series in February. But that was a summit that we created in the UK. It's been held in South Korea, France, and now India. I think so that speaks to the influence that UK can have in this post-Brexit world, whether it's on technology or on trade.
Do you think now we are, in essence, in a post-globalization era where we will see, and you've said this, that we will see far more changes and far more radical changes in less than a decade than we've seen in the last 25, 30 years? Yeah.
Now, we touched on the globalization part of that and why that's going to be different. But I think the big thing that is changing everything is AI. Now, technology has always changed everything, but there's something about AI which feels special and more radical. It's a general purpose technology, much like steam power, electricity, the internet. Every so often, these technologies come along which can transform how our entire society and economy operates, and AI is one of those. I think there are 2 things that we should bear in mind when we think about this transformation. One is the thing that actually all the AI leaders impressed upon me in Downing Street when they first came to see me 3 years ago, is they were struck by how fast the technology was advancing. and surprising even them. There's an organization in the US called Meta, which evaluates the progress of models. And it does it by looking at how much work the model can do, measured in time. You know, how long a task can it do before it needs some intervention and help? And roughly that's about an hour at the moment. But I think the more striking thing is that time length horizon, or task length horizon it's called, that time has doubled every 7 months for about 5 years. So if that trajectory continues, before you know it, these models will be capable of replicating a month's worth of human work just like that. And that is, I think, one way I think about it. The other thing is the speed of adoption. In the past, it took a long time for technologies to spread through an economy, spread through a society. The telephone took maybe 70 years to get to 100 million people. Electricity took 50 years. PCs took 15 years. The internet took 7 years. ChatGPT, to get to 100 million users, took 2 months. And I think that is what is striking about the pace of change here, how quickly this new technology is being adopted around the world, and just how transformative it is likely to be in the very short future.
While Mr. Sunak was in power, he was organizing conferences on different developments and trends in AI. He's now advising companies like Anthropic on how to keep up with regulation, how tech is changing, and I'm very curious, given the speed at which AI technologies are advancing, Mr. Sunak, your thoughts on how countries like India and the world in general should be looking at regulating artificial intelligence, because by the time people in government even understand what is happening, the technologies leapfrog much further.
Yeah, and I think there's an excellent question, which I thought about in government. Every government is thinking about it, and actually it goes to your earlier point about how does the UK position itself. Outside of the EU, one of the freedoms the UK has is on regulatory flexibility. And I made the decision, which I'm pleased the new government has continued with, not to introduce new regulation on AI. So that's what the EU has done and other places have done. I thought that was the wrong thing to do, Rahul, for precisely the reason you said. This technology is moving so quickly at the moment. My bias is towards innovation, because I want to make sure that we can get all the benefits from it that we know are there to help our societies in health and education and productivity. And if we start regulating it before we even know how it's going to operate, I think we're going to crimp growth. And that is what lots of companies would tell you is happening in the EU. Now, that said, I do think it's important for governments to ensure the security of their citizens. And I think we do know that AI in the wrong hands can be used for bad ends. And that's what I did in the UK, is to create a new AI security institute, which has the technical expertise, working with our intelligence services and related bodies, to evaluate these models, to make sure that we understand what security risks they pose, so that we can then, if we need, take corrective action. And I think that is the right place for government intervention at this moment to be. It's to be pro-innovation, encourage the adoption of these technologies, have a mind towards the security risks, and develop the expertise to deal with them in the same way we would with everything else. And things like cyber risk or bioterrorism are things that we need to be aware of and protect our citizens against, and make sure we are ahead of the game when it comes to AI. But outside of that, my bias would be in favor of innovation, which is, I'm pleased, what the UK is doing.
India is the fastest growing large economy in the world. Do you believe that India's success globally, India's importance globally, is directly linked to our economic status?
Yeah, look, India clearly is an economic superpower. If you think about it, in the last few decades, it's tripled its share of global GDP, which itself is an extraordinary thing to say. But I'll give you maybe a different example of illustrating the power, which talks to the economics, but also broadly. For the first time in about 100 years, in 2028, cricket is going to be an Olympic sport again. Right? Now, that is purely and simply because of India's new power and status in the world. Now, of course, there's an economic aspect to that, because the broadcast rights are economically important to the IOC, and the value in India will be higher if cricket is included. But it also, I think, speaks to the fact that if you've got 1.4 billion people becoming more economically, culturally, geopolitically significant, their desires, their needs, their wants are going to get recognition in the world. And I think cricket is a great example of that. But more broadly, look, of course, the economy is growing very fast. We talked about some of the things that are special about it. But I think when I look at economic growth going forward, a couple of things stand out to me: energy and technology. We talked about AI, and India is very well placed in AI, but AI is an energy-hungry innovation. You need energy to power these data centers, which is why the energy plan that is in place in India, I think, is so important. And then if you look at that Stanford index that I mentioned that ranks all those countries, I was very proud to say the UK is third, but very close just behind us, catching up very quickly, India is fourth. And as Prime Minister Modi ji always used to remind me, India also just about overtook the UK with the number of unicorns that were created. And that is a sign of, I think, the technical capability of the population here. Actually, Dario Modi, who's the founder of Anthropic, the company that I provide some advice for, was recently in India just a few days ago, and he was completely struck by the talent of the young entrepreneurs working on applications for AI to make sure that they have an impact here in India. So I think, look, there's a very exciting future economically, but I think it goes broader than that, and I think cricket is a good example.
Speaking of cricket, we have the former Australian Prime Minister, Mr. Tony Abbott, with us here. We've got the Sri Lankan Prime Minister, Harini Amarasuriya. We'll have the Indian Prime Minister. Maybe we can just do a toss-up and hopefully figure out at least till the semi-finals where we get to in 2028. And after that, then we can decide. You're all guests. Otherwise, essentially, we're rooting for India. Australia, Mr. Abbott, is a little tougher. So is England. But the Sri Lankan Prime Minister is our guest. Anyway, as long as India is in the final, we'll take on any of these countries. Padmaja.
Well, Tony and I have the Ashes to worry about in a couple of months' time. So.
Yeah, and all that aggression on the cricket field that we see from India, from all the countries, in fact, we're looking also at a very aggressive phase of trade. You spoke of how trade is the new currency now, and in a very transactional, aggressive form of trade that we are seeing internationally. How do you evaluate the stand that India has taken vis-a-vis trade, tariff? How do you look at India's stand?
Look, I think...
especially keeping in mind the way our economy is growing, the way we have pushed our economy and put it on the fast track.
Well, look, I think every country is going to work in its own national interests, right? And that is entirely right and what one would expect. And I think actually in the world that is, as you say, becoming more protectionist, India signing a big trade deal with the UK is an incredible positive sign of India's willingness to sit down with countries, find common ground, and then create transactions, contracts that are going to be mutually beneficial and give all the signaling benefits that I talked about before. And I'm sure India will look for other opportunities to do that and is talking to the EU at the moment. The UK is also talking to countries. So I think that will happen because other countries are keen to make sure that they keep trading with each other. But you said something very interesting about transaction-based politics, and I think that is a shame because if you approach these relationships, my personal experience is you will get less out of these relationships if they are both purely on transactional ways, and everyone is just going into the relationship thinking, what do I get in the here and now for me?
But that's the new reality with Donald Trump in the White House.
Yeah, and look, and everyone will react to it in a different way. My experience is, in life as in politics, I think when you can build relationships based on trust, I actually think they can over time be more powerful. And I found that in my job. I was struck, forming a relationship with the EU President, Ursula von der Leyen, who I didn't know until I got the job as Prime Minister, and she didn't know me, but we formed what I think is a close bond of trust between us. And because we had trust, we were able, in a very private way, with a small team, without any leaks or distraction, really work through some very difficult issues about the UK's post-Brexit relationship with the EU, especially as it concerned Northern Ireland, which is a special part of our country. And that trust is what enabled the two of us to find something that was mutually agreeable, that everyone thought was impossible to solve. And so my reflection on it is that where you can build relationships with trust, in the long run, I think they will actually be far more powerful.
Since you referred to cricket, in cricketing parlance, you were sent in when your team was facing a follow-on type situation. That's when you were sent in to bat as Prime Minister in the United Kingdom. in your own imagination, how actively do you harbor the idea of coming back to 10 Downing Street?
No, you're right. Look, the circumstances when I became Prime Minister were not straightforward. I mean, there'd been a run on the pound. I think my party was about 28 points behind in the polls at that point. Inflation was at a 40-year high, and I was the third Prime Minister in a matter of months. So I think you could say it wasn't the easiest. It wasn't the easiest of innings to walk out to, in your terms, Rahul. But look, my priority. We talked back to my faith earlier. We all have our dharma to do, right? And I drew my strength from the Gita at that time. I was like, look, I have a duty to do. I want to serve my country. I think I'm well placed to make a difference at this moment, and especially on the economy. That was the thing I was there to resolve, and that's what I put my energy and focus to. And it wasn't easy, and you have to make lots of decisions that aren't politically necessarily popular, but they will bring inflation down, and that's what we did. And when I left office, inflation was back at 2%, having been in double digits. The economy was growing well. Our borrowing and debt were all under control. So on the key task of stabilizing our economy, I'm proud of what we achieved. And as I said, circumstances were difficult, but in those, you have to just do your best. And as my mother-in-law would tell me, you do your level best, and the rest is left to God, and it will be what it will be.
Who gives you more advice between the father-in-law and the mother-in-law? Where do you get the more relevant and useful advice from?
Certainly the same. You don't pick between your children. You certainly don't pick between your in-laws.
Narayan is nodding and saying, yeah, good answer.
No, I mean, I get different advice from the two of them. It's probably worth spending a second on. And I'm very fortunate to get both their advice. Actually, from my father-in-law, he was very instrumental in me actually entering politics. And I was motivated by public service, but I also thought, well, look, you can have a successful career in the private sector, and that is also a way to impact people positively. And actually, he said to me that I should go and enter politics and hopefully serve in government. Yeah, and I thought, because his view was that was the best way to make a positive difference to my country. And I thought that was very striking, because here's someone who not only has founded an incredibly successful company that employs thousands and thousands of people, it's created a whole new industry. It changed how India was perceived on the global stage, and he did it in a particular way. And even he was saying that he thought I could go into government and make a bigger difference. So that was very inspiring to me. The other thing he said, which was a very good lodestar for me, was, in politics you often wonder, what do I aim for? Is it popularity? Is it to be loved? Is it to be feared? And you try and think, what am I aiming for? And in the same way that he organized his life, the thing that I took from him was to aim to be respected. And whether you're a corporate leader or a political leader, I think that's a great anchor to have, is aim for people's respect. It doesn't mean they're going to always agree with you, and you accept that. But if you're trying to be respected, it will lead to all the behaviors that I think will make you successful, and you'll look back with pride. So that's what I got from him. But my mother-in-law, what I learned from her was just an extraordinary compassion and empathy. And my wife has it as my mother-in-law has it, and that she has showed me how just being in touch with that compassion and that empathy with everyone can become a very fulfilling part of your life. Akshata and me have just set up a charity to focus on education in the UK, and inspired by the work that she has done here in India, and that will always stay with me, and that has, I think, rounded me out as a human being. But also when I see her communicate, and you talk about winning elections and things, I often think, the way that she can connect with people from every walk of life, whatever their background, in her way and with her authenticity, I think is extraordinary. And that is something that you can only watch and marvel at. I don't think it's something that I can necessarily learn from, although I wish I could.
Sir, you've been labeled as an anti-immigrant. Now, it's one thing to have a problem with illegal immigration, but there are so many around the world, not least of all in India, who aspire to be legal immigrants in the United Kingdom, enter the United Kingdom as students, and then perhaps get an opportunity of being there either on a skilled worker visa or initially on a graduate worker visa. If the United Kingdom doesn't give the same opportunities that have once existed, then I would suggest that your universities would be poorer because the UK wouldn't be perhaps number one as a choice for Indian students.
So look, on the issue of migration, you're right, look, I come from a family of immigrants, and I'm very proud that the UK is a multi-ethnic, multi-faith democracy, and I'm living proof of that. But I think, look, we have to separate on migration. There are two very clear policy areas that require focus, particularly in the UK. The first is the issue of illegal migration. And we've had an issue of people coming to the country, our country, illegally, and that's not acceptable. I mean, obviously from a very practical issue of security, it should be for the government who decides who comes to your own country. But also, as I said, it's just fundamental to our sovereignty, to any nation's sovereignty, that the people of that country decide who is coming. And that's why this issue of illegal migration is so important. And I set out a bunch of measures to tackle it, which at the time, felt radical, but I'm pleased now many countries in Europe have said the same things that I said back then about changing some of our outdated international frameworks to help us deal with this problem and send people away if they come illegally. So that's the first part. And look, on the topic of legal migration, what happened after COVID is the numbers in the UK really soared much higher than anyone expected or was appropriate. And that's why I took strong action to start bringing them down, which they are now doing. And I think it's important that that is seen through and seen through to completion. Alongside that, of course, the UK and every country wants to be a beacon for the world's most talented people to come and help contribute economically, to help grow the economy. And I'm struck, you see the success of the Indian diaspora all around the world, particularly though in technology and entrepreneurial companies. The UK, I think, like the US, I think there are some studies which show almost half of the fastest growing, particularly tech businesses, are founded by immigrants. And I think that's an important thing for us to keep in the back of our heads as we think about driving future growth and making sure that we are always a beacon for the world's most talented, skilled people who are willing to come and contribute economically, but I think crucially also integrate into society. Because what we can't have is people living separate lives. It's important that there's integration and some common bonds.
Because, you took a very strong stand on immigration. On that topic, did you find the spotlight then turned on you? Personally, how did you then strike the balance? Because you've been also very open and vocal about your immigrant roots. We had you lighting a diya. We also had you doing Gau Puja in UK. And then you're taking a very strong stand on immigration. How did you strike that balance?
Yeah. Look, I think you put it very well, actually, about the things that were going on in my mind. I should repeat what I said before. The UK, I'm proud, is a multi-faith, multi-ethnic democracy. And in fact, when I became Prime Minister, first non-white Prime Minister, first Hindu Prime Minister. In a sense, that was a remarkable thing. But actually, what was more remarkable was that no one made a particularly big deal of it. And I think that spoke to that multi-faith, multi-ethnic tolerance that I've touched on. And, I took the action I did on migration because I think it's important. I think it's because I come from a family of migrants that this issue of illegal migration really offends me because, Britain is built as a country where fairness is important to us, rules is important to us. We stand in queues when no one else does, and that is, who we are as a people. So when people jump the queue and come to our country illegally, it undermines that tolerance that I think is at the heart of our society's fabric. But look, I made a commitment to myself when I entered into politics. I wasn't going to change who I was. And I was comfortable with that, and Akshay and I talked about it. So that's why, I was happy lighting the Diwali diyas in Downing Street and painting Rangoli, and actually later that night, with the bit that no one saw, which was nice, and the cameras didn't film it, we did sparklers with our two daughters on the street. And I was never going to change who I was. Because of politics. I made that commitment to myself. And so, for me, in a sense, it wasn't a balance. That was just something that was non-negotiable to me.
I asked Mr. Sunak as he was walking in, how has this trip to India been? Amongst the various things he said he's been Diwali shopping, like many of you, I'm sure. So what does Diwali shopping in Delhi look like, Sunak sir?
Well, I was at Khan Market this morning, which was good. But actually, probably for me, the more important thing is the mithai. So we were talking about this earlier, but I was very lucky because I had dinner with my in-laws last night, And then I said to my mother-in-law, we'll get something sweet, which we didn't have at home. So she straight away said we were going to the Bengali sweet market. And so off we went to her friend who runs that. And then I've stuffed my face with kulfi all night long. I have got more.
No Mysore Pak for you?
Sorry?
Mysore Pak?
Actually, there was no Mysore Pak there last night, actually, was there? But then I have my jalebis and burfi with me now to take home, which I better check on the whole customs procedures about that. But otherwise, I have to eat them before I get on the plane. So for me, the Diwali shopping is mithai first, and then all the other bits second.
I don't know what Mr. Murthy is going to make of this. I know he said that keep me away from the limelight, but Mr. and Mrs. Murthy, you've been just such an integral part of this conversation, and we'll be very amiss if we didn't bring the mic to you just for a moment, because we've heard so much about what Mr. Sunak thinks about his in-laws, and given that you, Mr. Murthy, nudged Mr. Sunak towards politics, I'm very curious to ask you why you wanted Rishi, your son-in-law, to work towards public office and be in politics. How did that happen? And what do you make of his very distinguished career, being the first person of Indian origin to be Prime Minister of the United Kingdom? What do you make of it, Mr. Murthy? Ladies and gentlemen, can we have a very warm of applause for Mr. Narayan Murthy?
He is intelligent. He was highly accomplished in his work. He is a man of integrity, man of principles. We have seen so many transactions that brought these things out. So therefore, he is a wonderful example of somebody that should be in politics at this point of time in the world.
Mrs. Murthy seems very inspired by you as well, very clear instructions like in all your textbooks to your son-in-law. Who listens more to you, Sudhaji? Your daughter listens to you more or your son-in-law?
Well, both, I think. So I call Rishi as my new son. I've dedicated a book to you, Rishi, my new son.
That's absolutely fantastic.
But Rishi listens to me more, I think.
I wonder what Akshata would say when she listens to this. I'm sure
thankfully, she's not here, so that's good.
But we have to ask you this, since your father-in-law had nudged you into politics, what next? Is it going to be PM Sunak or Professor Sunak?
Well, my parents were unhappy I was not Dr. Sunak, so I think they would be much happier with Professor Sunak next if there was an option. But no, look, I want to keep being useful and productive, and what I hope is I can draw on my experience in government, my experience of business and technology to keep making a contribution to some of the things that we've been talking about. Actually, your questions covered the whole range of issues that leaders are grappling with here in Europe, everywhere else, and I hope I can draw on my experience to make a constructive contribution to how do we tackle some of those challenges to move our countries and societies forward. And I've gone back to do public policy work at Oxford University and Stanford University, both of where I studied. And I have to say, it's much better being at university when you don't have exams. So I'm enjoying that incredibly. But actually, I'm getting to spend a lot more time at home in North Yorkshire watching cricket. But actually, the thing I haven't really mentioned, the thing I'm loving more than anything, is spending time with our two young daughters, who I've missed seeing much over the last 5 years. But actually now, getting time with them, it's a real joy. So, long may that continue until they get bored of me and want to go off and become teenagers. So.
Ladies and gentlemen, can we have a very warm round of applause for Mr. Rishi Sunak? I said earlier that he said, I didn't make much of the fact that I was of Hindu origin and that was my faith, and despite that I became a Prime Minister. But I think a lot was made here in India. And just the fact that someone like you went on to become Prime Minister of the United Kingdom just says a lot to the kind of country the UK is at the moment. A melting pot truly in every global sense. We thank you very much. We've been absolutely delighted to have you, but I do hope when the Olympics happen in Los Angeles, it's India that wins, and maybe you'll be cheering for India as well, especially if it's against Australia. Let's have it.
Well, England-India final, and we'll beat the Aussies in the semis. How about that?
Woo! Look forward to that. Thank you very much. I'm sure Mr. Abbott's cheering for another seat, but that's fine. As long as India is winning, we're all fine. Thank you very much, Mr. Sunak, for coming. Thank you very much.
Thank you very much.
Thank you, sir.
What a pleasure.
Thank you.
Thank you.
Appreciate it.
Brilliant.
Thank
Thank you. That's so lovely. Thank you very much. No, that was great. Let me leave.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product. And therefore, it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched. And so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
What does Diwali mean for you? Lights, crackers, sweets, parties, family, profit.
Join us this Diwali
as we add more sparkle to your portfolio,
more punch to your balance sheet, and more flavor to your investment.
Because this festival of lights is also a festival of growth.
This Diwali, let's ignite your financial journey together.
Wishing you prosperity,
success, and light.
From all of us at NDTV Profit. Because we work for your profit.
She's a ballerina who defies gravity, a quantum physicist who decodes the universe. At the NDTV World Summit, Merit More brings science and art together to show us how imagination can bend the boundaries of possibility. Catch ballerina and quantum physicist Merit More at the NDTV World Summit. Live and exclusive at the NDTV World Summit 2025, 17th to 18th October on the NDTV network.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning.
Madam, before you start your keynote, I'd like to be the insufferable television journalist and ask you a couple of questions about your time in India. It's been nostalgia the last 24 hours for you.
Absolutely.
What's the most powerful memory of your time here? Is there a Hindi film? Is there food that you ate here that you miss dearly?
Yes, Chola Bhatura. I
Chola
love
Bhatura.
Chola Bhatura.
And a Hindi film?
And Hindi film. The first Hindi film that I ever saw was Abhiman. And that was in Sri Lanka, and I loved it, and I still love it.
Abhiman.
Abhiman.
All right. Thank you. You speak a little Hindi, ma'am?
Toda, toda.
Toda, toda Hindi. Well, you can finish your speech, and I'll quiz you a little bit in Hindi after the speech is over.
Please don't. Thank you very much. Excellencies, distinguished guests and delegates, friends, ladies and gentlemen. Ayubovan, Vanakkam, Namaste. It is a pleasure to join you at the NDTV World Summit 2025 here in New Delhi, a city that holds some of my most formative memories. I thank NDTV for the invitation to be part of this global gathering and for creating a forum for meaningful dialogue. Since its establishment, NDTV has been a prominent news organization and a platform for vigorous public discourse. Over the years, it has evolved as a convener of ideas, bringing together leaders, thinkers, innovators, cultural icons, and other voices to engage in dialogue at the NDTV World Summit. Excellencies, ladies and gentlemen, standing here in Delhi feels like coming full circle. 3 decades ago, in the early 1990s, I was a student at Hindu College, a young student from Sri Lanka, navigating a world in flux. Delhi was a city of ideas then, as it is now, reflecting the enduring spirit of India through the centuries. It was a period of change and economic reform. For many of us students, it was our first encounter with the concept of risk in life, in economics, in politics, and in identity. Returning now, several decades later, I see an India transformed, a confident, vibrant nation of 1.4 billion people charting its own path. India today stands among the fastest growing major economies in the world. Its digital revolution, green transition, and infrastructure initiatives are laying the foundations for Viksit Bharat, a vision of a developed and prosperous nation. India's journey offers valuable lessons for all developing countries, including my own. This spirit of progress and partnership was also evident during President Andhra Kumara Dissanayaka's state visit to India as his first overseas visit in 2024, and during Prime Minister Modi's visit to Sri Lanka in April this year. Reaffirming Sri Lanka's place in India's neighborhood first policy and Mahasagar vision, the discussions highlighted practical, multidimensional cooperation, reflecting a shared focus on resilience, growth, and shared prosperity. The conferring of Sri Lanka's highest honor, the Mitra Vibhushana, on Prime Minister Modi symbolized the strength of the enduring friendship and partnership between our two nations, and importantly, our peoples. On behalf of the people of Sri Lanka, I wish to express our deepest gratitude to Prime Minister Modi and most importantly to the Indian people for the assistance and sustained support extended to us during Sri Lanka's most severe economic crisis in 2022. This support is a lasting reminder that India's help at our hour of need is remembered and deeply valued by our people. The theme of this summit, Risk, Resolve, Renewal, captures the reality of our age. We live in a time when change no longer moves in predictable cycles. Instead, it arrives in shocks. A pandemic, a climate crisis, geopolitical shifts, and rapid technological disruption have together redefined what leadership demands. Uncertainty today is not episodic, it's structural, touching not only economics and security, but also trust, values, and the very meaning of progress. Yet uncertainty also brings opportunity. It compels us to rethink, to innovate, to reimagine, to adopt, and to imagine new possibilities. Leadership in such times is about equipping societies to respond with resilience, fairness, foresight, empathy, and effective communication. Risk is often portrayed as peril, sometimes mistaken for recklessness. However, risk is also the first step towards renewal and progress. Without taking risk, growth and change remain impossible. At the same time, as leaders, we must remember that risk may be experienced differently by different groups of people. So ensuring that the vulnerable and the marginalized are protected at all times is also critical. We must refrain from romanticizing risk as if that is the only impetus for change as well. Sri Lanka's path has been challenging. The past few years have been a lesson in both fragility and fortitude. As you know, Sri Lanka faced a period of severe economic and political crisis in the aftermath of the COVID-19 pandemic. Economic instability, shortages, and institutional challenges were compounded by political uncertainty, testing the nation's governance and social cohesion. Yet, the resilience and determination of the Sri Lankan people shone through. Sri Lanka's political history is marked by persistent popular mobilization, yet electoral processes have continued. The 2022 Aragalaya stands out in this long history of dissent for its scale, character, and impact. Unlike earlier movements, the Aragalaya forced the resignation of the former president, prime minister, and cabinet through largely peaceful protests without any visible political party leadership or a central figure guiding the movement. While loosely organized coordination structures existed, no single individual or group controlled the movement, reflecting a deliberate departure from traditional party-driven politics. Though it did not immediately change the government, the Aragalaya shaped public discourse and public consciousness and laid the groundwork for subsequent political shifts. The significance of the Aragalaya lies not just in the act of protest, but in the citizen mobilization it exemplified, a self-conscious, non-partisan demand for systemic change, transparency, and accountability. Even as state-sanctioned violence attempted to suppress the demands under the banner of law, order, and political stability, citizens' engagement persisted. Surveys conducted post-Aragalaya indicated a sharp decline in trust in politicians and political parties, yet a simultaneous rise in public political engagement. In essence, the movement revealed a critical distinction. Sri Lankans mistrusted the political establishment, but not democracy itself. The insistence on leaderless organization and the emphasis on people power signified a demand for deeper participatory democracy, challenging entrenched elite dominance. The 2024 presidential election illustrates the enduring impact of the Aragalaya. Voters elected Anurakumara Dissanayake, better known as AKD, and his National People's Power, the NPP party, a political outsider and a complete departure from the traditional elite, reflecting widespread anti-establishment sentiment. In the presidential election, Anurakumara Dissanayake secured 42% of the vote, symbolizing a total shift in the class basis of political power, from a Colombo-centric, westernized elite to a broader coalition of non-elite social forces. Just 2 months later, citizens reinforced this mandate with a 2/3 majority win for the NPP in the parliamentary general election. These outcomes underscore the power of people's mobilization and the resilience of Sri Lankan citizens in exercising their democratic rights and maintaining faith in elections as a mechanism for accountability. Excellencies, ladies and gentlemen, the broader engagement of women in mainstream politics has increased significantly. Until 2024, the highest percentage of women in parliament, in the Sri Lankan parliament, was just 5.8%, whereas it now stands at nearly 10%. For the first time in Sri Lanka's history, the 225-member parliament includes 22 women, of whom 20 are from our party, the National People's Power. This includes 2 cabinet ministers, including myself, and a deputy minister. All of these women have no prior political lineage. Notably, for the first time, women from the Malayalam community have been elected to power. While we know this is not enough, it is a meaningful beginning. Additionally, one of our parliamentarians is a person with visual impairment representing the disabled community, reflecting our government's commitment to diversity in parliament. Also, for the first time, a single party is represented from members from every district in Sri Lanka, so all 25 districts elected members of the NPP to parliament this time. This milestone reflects not only a significant shift in political representation, but also the broader impact of the Aragale in creating space for new voices, promoting inclusivity, and enabling meaningful participation of previously underrepresented groups in governance. The presidential and parliamentary elections of 2024 gave the National People's Power government a clear mandate for transformational change, to build a clean, inclusive, accountable, and forward-looking Sri Lanka. Under President Andra Kumara Dissanayaka's leadership, we have chosen to take responsible risks. We have reaffirmed our commitment to sound macroeconomic management and fiscal discipline. We are restructuring debt, modernizing governance, digitizing